Good day, everyone. All right, let me just share out this link, and then we will dive into the live stream. Hope you're all doing well. Bitcoin pumping through these highs. There were lots of indications that this was coming, which I did cover in yesterday's live stream. What I would be looking for, and currently we have seen exactly that. Let me give me one more second and we'll get into it. Sharing in the Discord. Live stream starting now. And on Twitter. All right. Usually I like to wait a couple minutes before I get into the details to allow people to click on the link and get in here for those that were waiting patiently for it. I may tab back and forth between the charts and EXO order flow. And I'm going to give my breakdown of the two leading into this reclaim of support and a big, nice bullish divergence at each level here. And as we grind it up, bullish absorption before a break up. Now, what is really important is if you don't understand what any of this means, is to go back and watch yesterday's live stream when we were breaking down. And I explained that the most important thing for me in terms of a bearish bias or a bullish bias for longs was if we start reclaiming key support and holding higher lows with bullish absorption. So CVD going down while price is going up, and it creates a divergence between CVD and price. Nice little liquidity grab. Combined with key technical ideas. So before we put in the this minor high and this sell-off, we had a bearish divergence, which I started yesterday's live stream right here. I talked about why I thought likely lower come. So we're going to go over the price action leading into this pump, and then we're going to cover live price action, looking for signs of strength or signs of weakness. And we'll see what the market brings today. Now, something that I really, that I think is really important is I give very frequent updates in the Discord. Like sometimes I will update every moment of relevance on the 5-minute chart around a key level. And I definitely don't want people to rely 100% on updates from me for every moment of live price action. And so I do think it's important to, if you are in the Discord, to keep your eyes on the charts and not on updates. You know, I explained, if you watched yesterday's live stream, I explained key idea is holding this previous high as resistance. Of course, we have two SR flips, or flipping this into support. So I started off the live stream yesterday with this range drawn out, right? With the idea of potentially looking for a scalp long on a sweep of this wick. We watched all of this live, and I explained why this impulse, although very scalpable level, probably still likely to see lower based on order flow. We didn't have a lot of support coming into this low. Here, I tried one scalp and I cut it at break even. Then I just explained that I'm either looking for lower or looking for structure to form, levels to be reclaimed, and bullish absorption in order flow. Explaining what that is, see aggressive market selling, signs that limit buyers are absorbing. Of course, we have nice little liquidity grabbing ideas in these local ranges, nice little entry triggers, but of course this grinding up on bullish absorption is relevant. But anyways, I'm only going over this because I know for certain, it's fairly rare that I wouldn't give an update through all of this, but I didn't because I covered exactly what was relevant here and exactly what I was looking for, and it was exactly happening. And I do want to encourage people to, because it's rare, I don't give, to actually look at the charts and look at XO and not just look for updates, if that makes sense. So anyways, we'll review this one more time. Key levels, the previous high. You know, as traders, we have kind of an if and, or if this, then that process, which is this previous high, if held as resistance, this is puts bearish scenarios on the table. When it's claimed as support, puts bullish ideas on the table. Price likes to interact with these levels very cleanly, claim, and then we're going to review order flow one more time for posterity's sake. We're claiming these levels. This is the 5-minute chart, and we're seeing all the selling getting absorbed as CVD is making lower lows and price is making higher lows, and then a big impulse, right? The opposite of yesterday's live stream. So now we're going to look at live price action. I'm going to give one more thought on this. Someone says manipulation. I don't think it's manipulation. I mean, in some ways, all price action is manipulated in the sense that it's produced by buying and selling and shorts, closing and opening, and people doing things. That is what manipulates price. We do have some local bearish divergences forming here. But one more thought. I said if we hold this as resistance, I would not touch this swing short probably for many months if we never reclaim this level, right? But there's nothing wrong with having us giving your position a chance to be a big home run, but hedging, reevaluating if these conditions aren't met, right? We start showing signs of strength. There's nothing wrong with even holding your short, taking a long, trimming your short, closing your short, waiting for weakness. But anyways, just want to go over all of that before we get into live price action. There were plenty of opportunities to get long here. This would have been very aggressive, longing down here, and this, we have a reclaim, price holds up, another impulse, another reclaim, price holds up, bullish absorption, impulse. All right, I'm going to delete all this and let's get into live price action. First, we can establish technical ideas. I mean, this is our last wick high. Not a ton of confluence here. We can just pull these levels, although they're in a folder. This is a fixed volume profile. And this is the anchored volume profile. We have value area high here, around 55,000. High volume area, around 57,000. Bit of a void between 47 and 58. And this wick high. Hard to argue there's a super high time frame level right here, but we will we'll evaluate local price action. All right, so let's just look at the bearish divergence. I mentioned it before. I wanted to cover previous price action. I just saw it out of the corner of my eye at the peak here. This is a bearish divergence in order flow. So you have, it's just local, but so what you have is you have an uptrend. This blue line is CVD, all right? Cumulative volume delta. This divergence does not mean that $18,000 or $25,000 is coming next. But what this means, this is a 5-minute chart. I am going to spend some time on order flow here, because it's something that I think very few people understand. So powerful, and it really is what moves the market. Between this blue line is CVD, cumulative volume delta, and it's something I use regularly to time my entries and to inform my local bias. So for example, I give this description here of this bearish divergence, creating a locally bearish bias. This would create a locally bullish bias, and this would create a locally bearish bias around here, right? And so let me just explain this really quick, because what we're going to actually do with this live price action is we're going to evaluate all of the positions opening and closing live and what this says about this breakout. And I'm going to do my best to interpret that accurately. But even whether I interpret it wrong or interpret it accurately or not, what we're going to be watching here is live orders coming into the market. So I have no way to know if somebody's going to initiate a $50 million market sell or a $50 million market buy at any given moment. But we can start to see how traders are positioning themselves. So anyways, blue line, CVD. It's overlaid over the price bars on the chart. You'll see these are a bar and a wick, a bar and a wick. These are just candles. Beside the candles is kind of an inside profile of what's happening in each 5-minute candle, which is the market selling and the market buying. Okay, so this is going to be helpful for members. This is going to be helpful for non-members. So let's just review this really quickly. In this top window, candles, the market selling, the market buying, and we can zoom in and see the actual amount here if we want to, okay? This blue line is the delta between the market selling and market buying. So each candle has volume in it. And in that volume, there's market buying, market selling, limit selling. This is showing the delta between the market buying and market selling. This information is also shown here. So we have volume, delta, and cumulative volume delta. So this is within the session that this is tagged to. We see as each this is freezing. There we go. We see this number changing, going higher and higher, 11.9, 22.7. It's essentially just adding the delta in each candle, which is just what this line is showing. So CVD is going up, CVD is going up. Between these two candles, CVD went from 35 million to 35.1 million, making an equal high essentially, price making a lower high. That's the divergence. So I'm going to explain one more concept here. What I'm going to be focusing on in terms of looking for signs of strength and weakness in order flow is heavy market buying causing cumulative volume delta to increase and price not moving up, showing that people are limit selling into this, or heavy market selling showing that, and price not moving down, showing that big traders are limit buying into this. And you're essentially trying to say who's exhibiting more strength, the limit buying or the market selling, the market buying or the limit selling, passive order, resting orders or aggressive orders. Aggressive being at market, and you can buy or sell at market, or the resting limit orders. So anyways, that's what we're going to be looking at here. Do not I'm going to explain how I would scalp into potential swing positions, both long and short in this range, taking profits aggressively. This is not going to be beginner friendly in terms of trading, and I would not advise anybody try to replicate or copy anything here. It is not financial advice. It is educational. And if you don't know how to limit your risk with a scalping system, so for example, I've scalped on exchanges that don't have fees. You just you can enter and exit at market for free. There's caveats to that. But when doing that, I've in a day taken 300 trades, right, on a 15-second chart. And before I did things like that, I would collect thousands of trades of data to fine-tune that process and that quick decision making. And so if you're not willing to put in that kind of work to test your execution, I did that with paper trading. Well, not paper trading, but a very small amount of money to me, because I also wanted to get a feel for the execution of the platform. But before I even sized up a little bit, I collected all this data. So all I would say is, if you don't have the wherewithal or the patience to collect data on your own execution and trading, you shouldn't be trying to trade. What are you doing trying to trade low time frames? But I'm going to explain the process, because these can be applied to higher time frame ideas. It can also be used to scalp into swing positions. All right, so let's dive into it. Take that caveat as very important. This is not something you try to copy without ever having done it before. I'm not taking any trades here. I'm going to mark out levels. I do not suspect to be taking trades from a scalping perspective for probably the next 15 minutes. But we'll see. We'll see what happens in order flow. And these are all the same ideas I would use on a higher time frame. I'm just going to mark out some levels first. So what we're going to do two things. Now I have the confidence that we'll find lots of unique, or not unique rather, consistent technical ideas here that the market exhibits on all time frames all the time. I'm going to mark out some levels that we will adjust as, this is the 1 minute chart, by the way. We're going to look at low time frame order flow, low time frame levels, as price is breaking out into multi-year highs here. Can look at a couple things really quickly in order flow for context, just locally. So we consolidated here, formed bullish absorption into an impulse. At the highs here, we're impulsing up on positions closing. This is open interest, just in another window. Red is decreasing. Blue is increasing. Open interest is telling you if positions are opening or closing. We understand that buying can be positions closing, which is shorts closing. Buying can be positions opening, which is longs opening. Selling can be the inverse as well, right? If longs are closing, if you close your long, you're selling, but that's a position closing. If you open a short, that's a position opening, but it's also selling. All right, so 3 panes here, CVD and price, open interest, and then this is some of that data just shown differently. So as price pushes up here, it's on positions closing. See all these big blocks, 3.9 million, 3.5 million, 4.2 million, 3.4 million. Some of those are going to be big positions getting stopped, right? Multi-million-dollar positions getting stopped out. We see it on the buy side, on an increase in delta. So there's more market buying than market selling in this candle. 2.6 million to the positive, and its positions closing. So we have short squeeze, short squeeze, short squeeze. Now at the highs in this local range, we're starting to develop some data. There's some, again, short squeeze, short squeeze. Now we have positions predominantly opening. 2.4 million positive delta, 1.8, 2.1 million, 4.5. We have increased open interest, so positions opening. People taking on risk. It can be shorts and longs opening. Of course, remember there's limit orders as well. The delta is just market buying into limit selling. We're seeing a little bit of absorption here. Nothing major. This is all confined locally. And signs of some absorption. We see 4.4 million market selling with a decrease in open interest. 5.6 million market selling here. We see it all in the candle with a decrease in open interest. So we have some relatively large positions opening locally here and closing locally here for the context of a local range, with the overall local context developing as bearish. But it's very slight. But let's keep that in mind. I would not short anything here. What I'd be looking for, so with the context of order flow being that, you can almost see it in price. Price is grinding up. And now we're starting to see limit selling, absorbing market buying. Price has formed a little bit of a mini range here. And this may not seem relevant to the higher time frame ideas here, but this is where you start to get a sense of how this breakout is developing. Because you have the initial move largely generated up here by positions closing. So why is that relevant? Well, if a move is driven by positions closing, as soon as all those positions are closed, and that could be short positions closing, that's the fuel for the move, right? It's not fueled by an influx of new positions opening, and as long as new positions keep opening, the move can carry on further. If it's fueled by positions closing, then you look for signs that that move is going to start fading. This is a technical resistance, by the way. On the 1 minute chart, we just have the point of control. I'm going to explain this and the GP of the move. But so the point is here, we're looking for signs that after this breakout, that there's interest in the market for positions to start opening and follow through with this breakout, or if there's not. So positions closing, squeezing the market up, and is there interest for new positions to open? So this is our earliest sign. Oh, the other thing I would just mention for scalping, you do really want to be on an exchange that has fees that are conducive to scalping. So if you're going to use any kind of low time frame scalping techniques, your profits will just get eaten up by fees if you don't have an exchange that to scalp on that is conducive to it. So for example, there's, I think, a link in this YouTube video, but Mexc, it's not my favorite exchange all around. I much prefer other exchanges, and I probably wouldn't use it very often if it wasn't one of the few non-KYC options, but it has very low fees. So that's one good thing about it. And it does give a little bit more flexibility, but that's a big component to low time frame trading. And so if you're practicing on something like, say, TradingView has a paper trading platform, you can actually go in the settings and add the fees. So you can collect that in your data if you're paper trading some scalping ideas. This is a valid scalp. And the way I would trade this is I would just short this. I would size for something like this as a scalp, targeting into this. Now it's a 0.247 R trade, but how I would trade this would depend also on the exchange and the fee structure. So for example, like Rollbit has an insane, I know people don't like, there's lots of FUD about Rollbit, and I've seen people break down why the fee structure is the worst thing. They just don't understand, I guess, how these things work. It is an incredibly good scalping fee structure because you don't pay fees. So for example, you could open a position on this scalping low time frame reaction and just hold if there's a breakdown. And if there's any strength, you can close it for essentially free in a profit, even at a 0.1% move. And if there's any weakness, you can reopen it. So it just, I'm not even saying that that's the best way to manage the position on Rollbit. But what I am saying is that it gives you so much flexibility because you can just open and close a position for free at any point, and price moving slightly in your favor, and there's no slippage. I mean, it's kind of crazy. It's a crazy scalping. Anyways, so that being said, there's some caveats here, and I'm just going to assume that none of you are stupid enough to start trading with meaningful money, a strategy you've never tested on low time frame price action that you're just learning about for the first time on a live stream. So, but I'm going to try to share concepts, right? It's the double-edged sword of live updates. I do a lot of live updates covering concepts that I have educational content on, which is, there are things that I think you can only learn on a live chart, but people want to apply the thing that they're learning on a live chart before they've learned the thing. And so take this as an educational opportunity, not as a trading one, please. In fact, maybe I'll say off the bat, I'll probably lose every single trade that I discuss here. There's the caveat. But anyways, let's go over the idea here. It's super low time frame. It is based off of the same concepts I would use on any time frame. Worth noting that it's possible a market buy comes in and price goes straight up through these highs in a 1 minute candle. Anything is possible. But anyways, let's go over the concept here. This is a volume profile. It's just pulled across this 1 minute range. this is the point of control. It's the price at which the most volume has accumulated so far in this 1 minute range, right? We have a value area high, a value area low. This is pulled in correctly. This is just a fib pull, fib resistance. This is a pivot high impulse. Actually might be this as well, but anyways, so we're getting some confluence here. We have an impulse, a range, another impulse, bearish divergences as price starts consolidating, breaking down the point of control, breaking down this previous high. So there's some signs that price has selling pressure, flipping down, local resistance. And what we're noticing is a confluence with order flow. So we have a little bit of, we have evidence that there's some bigger traders, not evidence that they're big traders trading with the direction of this position, because we have some impulses here and evidence of selling pressure because price failed to make new highs while CVD made equal highs, or price failed to even make equal highs. Now, what I mean when I say that you could apply these concepts to any time frame, and I would suggest that the 1 minute chart is the least relevant place to apply these concepts, is you can do the exact same thing 3 hours from now, but on the 15-minute chart. Wait for a range to develop, pull your levels, be the same thing happening here. You have the bearish divergences forming, the sell-off, bullish. You have all the technical ideas at play here. You have your key levels marked out. Someone asking, do you think a swing failure on 52-150 seems valid? Well, it's our last pivot high, right? On a high time frame. After that, there's no clear structure here. There's levels on the volume profile. I mean, after that, it's all-time highs. So yeah, it's certainly possible that we sweep that 57K high and then reject, or 52,150 high and then reject. I think the worst case scenario for me at this point, in terms of obtaining a swing short, would be something like this in a 1 minute candle, right? Like a 10-minute straight up move, 1 minute 10% straight up move and then just straight down. I don't think that's the most likely scenario, because anything above here is going to be really hard to take a swing short on without seeing like lower highs, structured weaknesses, I think. So if it's just a wick up, wick down, then swing shorts are going to be pretty tough to find. But one of the benefits of potentially scalping yourself into a swing is that you can take profits, and you could spend, like, let's just say an afternoon scalping, and you end up with, it doesn't matter what the stats are, but maybe you've taken 30 scalps, and you end up with a 50% win rate, and maybe you've made, I'm just throwing random numbers out here, 5R in your day of scalping, but you're left with half of a short position running. That it's all in profits, everything's locked in, and there's some weakness developing. the end of the session, you're holding a short, and it has the opportunity to turn into a swing, and the vice versa can happen with a long, right? So there's going to be some long ideas here, some short ideas, and we'll talk about the idea of scalping yourself into a trade. Or into a swing. So again, when we're looking, I'm taking this as an opportunity to keep evaluating order flow, to give my perspective on what's happening. Sometimes nothing particularly interesting is happening. And so it's important that we keep an eye when we're trading, especially when we're trading ideas based on a low time frame, that we keep an eye on low time frame price action, and we keep an eye on low time frame order flow. Kind of waiting for structure to develop. There's a few structural ideas here, right, that are relevant. Be interesting to see how price reacts to them. All of these pivot lows are likely to be relevant, right? This one, it would be something, if I'm scalping, that I would be evaluating order flow and looking to take a scalp long and close out this scalp short or take profits from it. It would just be the inverse of the current scalp idea. But if we do not reclaim this level, or we show weakness, then I would cut the short and look for these lows to be tested and do the same thing. Wait, I want to address this because it's kind of fun to talk to the trolls. Sometimes I do it on Twitter, but we got one in the chat. All right, so someone says, "What happens to bearish ape?" Shaking my head, and he says, "Where's your 200x short trade?" Well, Isaac, I'll tell you, I have longs and shorts. I'll tell you something else. The fact that you asked where's my 200x short trade tells me that you're a beginner. Not even a beginner. You've probably never traded in your life because you don't understand what leverage is or how it works, as if it's a relevant point to reference on a trade. So first there's that. The second thing is, I can take 300 or 400 trades in a day if I'm scalping. Half will be long, half will be short. My win rate will be about 50%. And I've put up some pretty insane numbers in those scalping sessions. I manage my risk, so there's another concept here. When I take a short, I risk 1% of my account maximum on that position. If I take a long, I risk 1%. I trade long and short. And so how's my short trade doing? Well, I've clearly stopped it out for all the reasons I explained at the beginning of this live stream. And I don't claim to know what the market's going to do. The market and price action is made up of hundreds, thousands, sometimes millions of people making random decisions based on their own reasons. But people make decisions for similar reasons, so similar patterns arise in the market. And I claim to be able to be consistent in evaluating key ideas, key levels of importance, not to be able to predict what the market is going to do for the next 2 months, 1 week, or even 4 hours. But to look at what the market is doing and how it is interacting with key levels, I think I'm pretty consistent there. But it's funny. So I'm just going to explain something. One more thing for the trolls. So like I took this so long down here, right? So I take this long. This is how I like to trade. I'm not saying this is how anyone else has to trade. I put a stop loss. I take a long. I don't know what's going to happen. It's a technical idea. I make money, and I make 12 times more than I lose, right? In this example. I risk $1 to make $12, or I risk $1,000 to make 12,000, or I risk $10,000 to make 120 grand, right? It just depends on the size of your account. Then I take a short, and I lose $1. I don't care, right? So like I took this Matic long for the same reason that I'm still sitting in. I risk $1 to make $18, or I risk $10,000 to make $180,000. And this is how I structure my trades. If my trade's not working, I just stop it out, right? And my goal is to have more winners than losers, or to have my winners be much bigger than my losers, and to never risk more than 1 to 2% of my trading account on a single idea, so I can survive loss streaks, right? So if I have a $100,000 trading account and I risk $1,000 to make $18,000, if I lose, I still have $99,000 left. If I win, I have $118,000, right? And I just do that. I rinse and repeat. Same reason I'm in this FTM long, right? Mr. Isaac. So I'm in this long. We're up. Prices rallied about 33%. Shared these on Twitter too, by the way, and in the public Discord. Explained I'm still in them and what my targets are. And so while I'm sitting here risking $1 to make $18 or $10,000 to make $180,000, you're kind of asking me how I feel about taking a 1-hour stop loss. I feel great because this is the way I trade. It allows me to manage my risk, puts me in incredible positions. I don't care what the market does at any given point. If my trade idea is not working, I cut the position. Does that make sense? I trade on all time frames. I trade long and short. I have longs from support. I look for shorts at resistance. Sometimes I trade breakouts if order flow is very compelling. And sometimes I take losses. Sometimes I take wins. On Rollbit, this would be pretty nice. Do you want to know something, Mr. Isaac? If I'm scalping this on Rollbit, this trade almost has made more money than I just lost on my short, right? Because it's confined with a 0.37 stop. It's confined here as a 1-hour trade. And if it reaches this target here, I've already made my money back. And some. But what people don't seem to understand is they think the outcome of single trades matters. No, not when you're trading this way, right? Because you're not expecting to win or lose any individual trade. And you're looking at the market as a probabilistic environment, which is to say that I don't know if FTM is going to bounce here and run up into this target up above, taking these highs. This is just me explaining this trade. It's a 4-hour chart on FTM. But I do know that this is a high probability idea, and the risk reward, I get to risk $1 to make a large multiple of $1 taking this trade. So I take it. It either works or it doesn't. If it doesn't work, then I just move on to the next trade, right? Hopefully that makes sense to you. If not, I wish you good luck, sir, in your endeavor to have a 100% win rate, not structure your trades with stop losses or targets. And I hope Bitcoin goes up forever. But my favorite thing is, of course, I don't like talking about positions I'm in that I didn't share, right? Like, for example, it's very rare. It is rare in the Discord. It happens occasionally. The other day, yesterday, I took a long here on Doge. I didn't share it because I hadn't talked about the idea. I was looking at these lows, and I closed a big portion of it here. The trade looked something like this. It was just sweeping these pivot lows, reclaiming them. Came in a little late, and I closed a lot of it here. I don't like talking about those. I don't like posting about them on Twitter and the Discord or whatever, because I think I have gained enough credibility because I share so many of ideas publicly before the levels I'm looking at trading, what my trade trigger is, all these different things. But of course, I know it's never fun to see somebody talk about a position that they're in that they never shared before. But like yesterday, if you watch my live stream explaining exactly what I would look at as a bullish scenario after this breakdown, it's exactly what happened. And I guess what I would say is that some of the positions I'm in shouldn't be surprising, but it's yeah, I don't know. It is frustrating because there's two types of people. There's the type of people who you might explain something. You might say, like, if we start reclaiming levels and we start having bullish absorption, I'd be looking to take a long. This is the scenario I'd be looking at, right? And they'll say, oh, that makes perfect sense. I'm going to look for the same thing. But they might think that, but unless you say price is reclaiming this level, aggressive selling is being absorbed, this could be, you could structure long trades off of either of these, just as described. They can't see what's happening on the chart, or they're not interested in gaining that experience, right? They're not interested in, because what's important is there's two things. You have to learn a concept, and there's no way to explain a concept without going back and showing historical examples, right? So like I have videos where I go back and I show, here's an example of what I'm talking about. Here's an example, here's an example, here's an example. Okay, that's great. But then there's something else that you have to do. You have to be able to identify the example live. That's very hard. It's one thing to go back and look and be like, look, we reclaimed this level, like I just did. So I do live updates frequently, showing, because when all you see is this, it can be very hard, maybe, especially if you don't have levels marked on your chart. You always should. It can be very hard to say, like, is price reclaiming here? Is there bullish absorption? And get really spooked out here, even though price is testing it, reclaiming it. We have a low local range here. So you have to learn how to recognize the ideas live. That's what we're doing now, right? I'm showing live examples of how I would interpret these ideas. So there's some experience there, because emotions run pretty high during a live price action. So it can be hard, your biases can take over and you're not able to see the idea. So I'll demonstrate how I would view it live. But then you actually have to be able to, you have to collect data and have confidence in yourself, right? You need to be able to, without anybody's insight, you need to be able to say, hey, here's this idea I've been learning, or I've been practicing, or is in my system. I'm going to put on a trade with my stop loss here, risking this amount of money, and my target here. All right? So my goal is that hopefully you guys take these concepts with you. So I have a short. This is one of those scenarios I'm talking about, scalping myself into a short that could be a swing. And where could it be a swing? On the very off chance that this happens. But if this happens, I've got to be prepared to take profits on that swing, right? Or on that scalp. And I'll just continue scalping. I don't need to turn this into a swing trade unless it has the opportunity to, right? I want to be so clear. This is not the easiest way to trade. This is not beginner friendly because you have to make quick decisions on a very low time frame and interpret data very accurately, especially with these tight invalidation setups. But what I'm demonstrating is you can apply these concepts to a higher time frame where you have a little more time to make a decision to interpret data. So we're looking at key levels here. I've explained why the trade here, if there was a trade at all, was short from an order flow perspective and a technical perspective. If I'm scalping this, we're looking at something like a 2R win. So I lose $1 if I lose, or I make $2 if I win. So if I lose my next 2 trades, I lose. I'm break even. So this is it. This is a scalp. We have this volume coming in here. We have the level being reclaimed. You can give a little leeway here if you want, but now you need to be considering taking profits off this position if there's any strength, right? Because this can reverse quickly. We have an SR flip level here. But if you're scalping in this tight of a range, you can really only allow price so much leeway before making a decision to take profits or not. And you decide, do I want to make money or try to hit a home run or try to predict what's going to happen next? And for now, this level is being reclaimed. We have high volume. Let's go over to order flow. I would be taking profits on this scalp. 5.3 million negative delta. So why was there so much negative delta here at the bottom of this candle and in this candle? Why was it 5.3 million? Well, a lot of these candles had 12,000, 97,000, 223,000. Well, we have this structure. And why is this structure relevant? Because believe it or not, these consolidation impulses, pivot lows, positions are opening and closing, and people are putting their invalidation, whether it's a hard stop loss or manually closing these positions based off of these low time frame breaks in structure. So we have, I just want to point something out. We did flip this as an SR resistance. This was the important idea here. I am not going to be scalping all of these levels either because I have to put some energy into explaining these concepts. Scalp some of them. There's no long trade here. Price retested, broke. There's 2 long trades that would be interesting locally. A reclaim of this level or just a sweep of this wick, but waiting for a reclaim. So there's no reclaim, no signs of strength, no structure. Price has broken this down. Same concept I'd use on a high time frame. SR flip, break. But again, very small margins of error to make decisions. And I talk about this a lot in the Discord, and this applies so much when scalping. People freeze up with positions where they have 3 days to make a decision. Freeze up trying to make the perfect decision. Oh, shoot. Didn't switch over. All right. I was just showing SR flip, right? So here, here, here. These are the interesting ideas. Reclaiming or just running these levels. But you don't have to trade every level, and you can let trades go. But anyways, the point I was making was this. I talk about that your goal in trading is not to make the perfect decision, is to make reasonable decisions, right? And the reason there's no such thing as a perfect decision is because you don't know what's going to happen. And every decision has a cost benefit. And you should do cost benefit analysis on every decision. It has a risk and a reward. So for example, taking profits on a scalp short here has a risk benefit or a risk and a reward. You can do cost benefit analysis. Of course, the benefit of closing it is you lock in profits and you have a winner. Is it reasonable to hold if price just breaks down? Yes. Is it reasonable to claim or to take profits if price starts claiming the level? Yes. And in scalping, you need to make the decision very quickly. In trading higher time frame structures, you might have a day to make the decision. You might have a week to make the decision. But you need to make a reasonable decision, not try to make the perfect decision. And I'm not going to take profits on this scalp and then suddenly feel, as soon as I see price go a little lower, like I made the wrong decision, because I can be content with the idea that I made a reasonable decision. Price reclaiming the level. Relevant levels are marked out here. I do want to note a couple things. Yes, we have a lot of negative delta relative to the volume in these candles. So just not a lot of volume in the candles. So what this means is up here, for example, you have 55 million volume in this 5-minute candle, a 5.5 million positive delta. Here you have 8.3 million volume with a 5.3 negative. So the ratio of delta to volume is incredibly high. The amount of volume is very low. So this is not certainty by any means, but I wouldn't be surprised to see a range form here, and maybe we come back up and take these levels. But I'd be surprised if this is a major low before another strong impulse. This looks more like minor low volume, not major low volume. Now, there are cases where you have a major low on a very low time frame reaction after a big impulse. And in those cases, you oftentimes will see a bit of a bigger move. It doesn't have to be, but way more volume, right? So like if we had like an 80 million volume candle wick down into this, you could put in another major pivot before continuation. I'd be surprised if this was one. What I'm seeing now is ranging order flow, essentially. People longing, getting stopped out, people reopening. There's a technical case for looking for longs here. Of course, for scalping longs. I feel like every time, but we see, prices holding this technical resistance, reclaiming these lows. Got to repull some levels here. Be a little wary of this long. I don't really like it that much, honestly. I wish if this wick had a little bit more. This short looked better than the long. A little more volume in this would be nice, but the other option. There's two options. Just long it. Short, long. It's technical. Risk is well defined, much like the short idea. Or be open to longing something like this if we get a bigger bullish divergence between these lows. But this is a technical reclaim. It's a long trigger. It's actually the exact inverse. It's a long trigger on the chart, right? Wouldn't have minded seeing a little bit more volume there. If I was on roll bit, I know this sounds crazy. I'd be looking for this level. I'd be looking for follow through here. Like this is almost a 0.3R range. And if you can open and close your position for free, again, you have so much flexibility. It's kind of sweet. Which I did a post some months ago about just how good of a scalping platform it is. And I shared a bunch of that data in the Discord. But it's funny because people just give so much hate. Oh, rollbit shill. It's like, I don't know. No one ever looks into anything. They just repeat things they see on Twitter, I guess. It's the same with Mexc. It's the same with exchanges I love. All I'm talking about when I shared all these ideas of like, Rollbit's actually a sweet platform for scalping, and I'd heard a lot about it. I heard a lot of bad things about it. I don't like to make a judgment unless I have experience myself. So I went on there and did a bunch of testing with their fee structures because I thought I heard about how bad the fee structure was. I'm like, oh, I want to look into that fee structure. So I looked at it. And I was like, this actually looks incredible for a certain style of trading that like you almost couldn't do on any other exchange. I'm like, I'm going to test that. I tested it and I was like, yes, it is indeed. Did all the math on it. And I have no idea if it's a good exchange, if they're going to rug everybody tomorrow, if they're going to steal all your money. That wasn't what I was testing. I was just testing the idea of their fee structure. But it's just funny how you'll get responses from people and they'll call you a shill, they'll whatever. And it's like, I don't know. People are... But that's why, as traders who put a little bit of thought into the things they do, can generate an edge in the market. So does this make sense to everybody so far? The 1 minute structures we're looking at, the signs of strength, signs of weakness, the short idea here, why we were seeing bearish divergences forming, or how we were seeing bearish divergences forming, what the trigger would be to short. And, you know, you don't have to wait for like the new high or something like that to form, but that all these ideas can be practiced on low time frames, but applied to high time frames. Hey, and I'll say this. What's cool about these low time frame, in theory, like people would expect, especially in a really volatile environment like this breakout, that technical analysis would be the least applicable, right? On the 1 minute time frame, these ideas would be the most randomized or more random in nature than like high time frame ideas. But I have the complete confidence to just apply this to a live chart on the 1 minute time frame, all of these ideas, because it's the idea of a fractal nature to price action, meaning that it actually behaves the same at every time frame, whether you're looking at the weekly chart, monthly chart, daily chart, hourly, or the 1 second chart, or the 1 minute chart like we're doing now. The exact same ideas, sweep, reclaim, resistance, reaction, all these levels remain relevant, point of control, forming a parallel channel, and can be used on any time frame. So when people say, you know what, like people often ask me, you know, how do I differentiate my analysis between scalping or between this asset or that asset? And I just say that I use the exact same ideas on I just base it on structure. And so depending on the structure or the time frame that's relevant, based on the types of trades or decisions I'm making, that's how I analyze the market. Because you can apply these ideas. at all time frames. All right, let's take a look at order flow here. We have a reaction. We have a reclaim. This is, again, very low time frame. You know, it's not uncommon for me to come away from a scalping session with a 50% win rate, but your wins usually offset your losses. And as this range develops, we might see some more opportunities for higher risk reward setups. But you know, it's really hard to squeeze. But anyways, we're looking at order flow. I'll just explain this and I'll go back to the chart. We have a bunch of, basically we have bearish absorption. We have some signs of some market longs coming in up here, very small type range. This is our bearish absorptions, cumulative volume delta increasing, price decreasing. We see a bit of a sell-off here, and we see a lot of these positions presumably getting stopped out, right? But not wanting to get greedy, trading this time frame, we got to take profits on the short from up here down here, right? Because we see evidence that that liquidity has been grabbed, that this bearish that was forming this bearish divergence. We see evidence of strength in a reclaim, and again, exact same ideas I talked about on yesterday's live stream of what would be a sign of strength, what would be a sign of strength in order flow, price action, reclaiming levels. Well, you got to start shifting some of your bias. And so if I'm short here, I would apply the same idea, right? If I'm short up here for the reasons I described earlier, then I have to close that scalp short because we didn't continue to break down. We're reclaiming the levels. A lot of that liquidity has been grabbed. And I don't need to make the perfect decision. I need to make a reasonable decision. Then we have a long trigger, which is a reclaim of this level. But it's very hard, like I said, you know, we're talking 0.3% stop losses type situations here. There might be some opportunities for higher risk reward setups than like something like this short as this range develops. But right now, the point I was going to make earlier, is very hard to squeeze. You know, you could like, it's very hard to squeeze an 8R out of this with like a 0.08% stop loss. We're still in pretty tightly confined price action with a very tightly confined targets. It's going to be hard to squeeze more than a couple R, even one R out of some of these scalp ideas until this range gets a little bigger. So anyways, Mark Bowering says, I see you often using the POC. Some traders I've heard saying they don't like trading at the point of control because it's crowded. Some say only if it's a quick move to the POC. What do you say? It depends. I mean, I don't know. It's crowded in the sense that it literally identifies where the most volume is traded. So it's crowded in that sense that lots of people are trading that level. The idea of the POC isn't that it's understanding that, like, as price approaches it, like, so for example, you have what happens sometimes. There's two things that can happen. Say you have a short position. You have a short position here, and you don't know it's the point of control, but price has been ranging, and then there's going to be the average of the most people with a short position is at the point of control, let's say, and a long position. Okay, so people, the highest average of people, this is where the most volume's traded, have a long position out of this range here and a short. Price impulses up. All the shorts are underwater. All the longs are in profit. The reason a point of control, among other reasons, but can become just an important level, is this is the level at which the most people get out at break even on their shorts. So they're underwater, they get out at break even. For those that held through a big drawdown, they get out of their shorts, and this is the level that the most people are at break even. So if they've had a big move and they've moved their stop to break even, this becomes an important level. There can be other reasons people were interested in trading the POC that can still be evident even after a retest of this level. But here's an example. So when price comes back to the point of control, it's an opportunity for shorts to go long, which is just to go break even. And it's an opportunity for longs to go short, right? Which is break even. So you're expecting a high level of liquidity to be generated back at the POC, and that can generate a nice reaction. So it is crowded in some sense of the word, but oftentimes it's positions closing because it's revisiting where a lot of positions opened. Now, how many people do I think have pulled, for example, these volume profiles on the 1 minute chart and understand that there's a lot of positions accumulating here relative to the range? I'm not saying there's a lot relative to Bitcoin's history and there's positions being traded here. I'd be surprised if it's very many people that are looking at this information at this depth. So, you know, would I want to have these ideas on my chart even at this point? Yes, because I don't actually think people are looking at them. I actually don't think people, I mean, you can see it in order flow. People aren't often looking at any of this stuff. I mean, you're usually, like when I'm scalping, the vast majority of my trades, I mean, even when I'm trading, are doing the opposite of what the vast majority of people are doing with market orders. In order flow, right? Like, for example, I'm longing. I see a bunch of market selling coming in here. I'm market longing. I see a lot of market longing getting absorbed. I'm market selling. I'm going short. So people, this idea like these levels are crowded trades, I mean, there's certainly limit orders there that are counter trading these moves, which are typically the bigger traders. But yeah, I don't know. So let's just note a couple things. We're breaking out of this descending structure. I love, which is why I drew it, I love parallel structures. But I love what I would call a predictive parallel structure. So what a lot of people will do is they'll look at this as finally an established parallel structure. Hold on, give me a second. I need to just create a folder here for this little session because I want to just be able to tab this out really quickly. So they'll say, oh, there's no structure here, and this is on all time frames, and then they'll say, oh, look, a parallel structure, and then they'll think this is the relevant level. What I like to do is, before the level's even formed, I pull my trend angle from the highs, I anchor it to the lows, and I extend it, and I use the first touch as a confluence for a structure. All right, so that's, sometimes these are confluent with key levels, sometimes it's not, but the idea here being that this is the relevant touch, not this. Price likes to move in parallel structures. You'll find them everywhere. And you can kind of use that knowledge to think, instead of waiting for 4 touches, anticipate a parallel structure forming. Again, with confluence, you utilize other ideas, but it's very powerful. And if I could show you the number of tops and bottoms, so to speak, that were formed by these predictive parallel structures on all time frames, it would blow your mind. But anyways, it's very rare. I mean, although I have done it, it's kind of tough, especially on these low time frame ideas, that you're going to actually be trading this touch. while instead waiting for the long on this reclaim, right? So like this would be the structure of this trade in the same way, instead of the actual touch of the level, waiting for a sign of strength, waiting for a reclaim. All right, again, don't take my my relaxed attitude here for a sign that we don't need to care what's happening here because we're in a long and price is going up and we just took a short. If we're scalping low time frame price action, we need to really think about how price is interacting with these levels and what order flow looks like. So I'm going to continue to do that. So we had one scalp short idea. We have one scalp long idea. We're forming a range. We're forming a new point of control. The horizontal structures of price action are very clear here, right? Now here's another concept. I want to remove the risk from this trade. Why? Well, I have my reaction, I have my reclaim. I can reevaluate, especially on Rollbit where you're not paying fees. But Mexc also has very low fees. I want to start thinking about removing my risk because I'm coming to target now. I can give this long an opportunity for price just to impulse straight through these highs. But I also want to make a reasonable decision here. We have a range. We have key levels. We have reclaims and reactions. I don't need to make the perfect decision. I need to start making reasonable decisions. I can give price an opportunity to continue its impulse, but I would even consider taking profits off of this position, right? I'd prefer to take profits off of this position now than even let it run back to entry, and I'm going to explain why. Again, we're scalping. This is something my goal is my goal might be in a scalping session to take 20, 30, 40, 50 trades. I can get in and out of trades for many different reasons, but I am not looking to round trip a bunch of trades in a scalping session that are in meaningful profits, right? Because that's the entire point of, we'll call it scalping, call it day trading, low time frame, whatever you want to do. So we're going to just make a couple notes here about why it could make sense to take profits on the long. And I'm going to keep re-polling levels here because levels change, structure changes. And so new levels become relevant quickly. For anyone new tuning into this, this is me applying all the stuff I would use on a high time frame to make decisions on the 1 minute chart because one, I have the confidence to do that. I have the confidence to take losses, take wins, and to, well, hold on 1 second. Let me finish this point. There's a point of control here that's forming. That's important. We want to keep re-polling this volume profile. You can also do fixed range. I like to re-poll because sometimes I just like to move it around a little bit. Not in this instance, but I just like to see it from different perspectives. I like to have the option just to quickly pull it back here. You can even pull multiple volume profiles. I'm just used to using this fixed range. So anyways, it's important to re-poll. We have a point of control developing. And the reason I took profits, I feel a little scatterbrained, obviously, trying to talk through some of this stuff and having a couple different ideas popping through my head, which is the reason I took profit is if this is a horizontal range forming here, it's just the middle of the range and we have a nice pivot high here. So giving price a chance to break out of this level, perfectly fine, but I'm scalping. I want to lock in that profit. And I can see if I want to reopen that position back down on a nice reaction off the point of control or retest of this level, I can. But I can reopen it anywhere below this level or at this level, and I'm better off having just taken profits here. Hopefully that makes sense. I'm not getting married to a position that I'm scalping on the 1 minute chart. Same reason I took the short profits. I take the profits. We go a little lower. I don't care. I can reassess. You have a reclaim. It's a technical trigger. Reclaim, retest. And I'm just evaluating that way. Anyways, to continue on with my scatterbrained thoughts here. What was I talking about right before? I had a thought pop into my head that was important, but I wanted to cover the live concept here first. I don't know. Maybe it didn't matter. Let's just, I guess, abandon the concept for now. Maybe it will pop back into my head. And again, just want to make reasonable decisions, keep track of what levels are relevant here. And I'm just pointing out that these levels are relevant on all time frames, including so right now, like how many times have we seen a point of control form, sweep the liquidity under the lows, break out of a descending structure, test the middle of a channel, retest the point of control and the trend line of that structure. This is happening on a 1 minute chart. It's pretty amazing because this should be, especially on these low time frames, you would imagine so random what price is doing. But explain to me, I remember, maybe it was something I was going to say, maybe not the exact thing, but explain to me how the levels I'm pulling and the decisions I'm making are consistently relevant on a 1 minute chart if it's completely random. And I have the confidence to say that I could sit here for 3 hours watching this 1 minute chart and have a consistent read on what's happening locally here and a relevant read. Consistent doesn't mean perfect. I do believe that there is a probabilistic nature of the market, and there's no way to know with certainty what will happen. And that's why we use risk management and so on. But here's the thing. So like somebody will get a lot of, like something you'll see on Twitter. You'll see someone saying, don't worry, price is going up, trust me. Or I took this trade on a gut feeling, right? Maybe they win, maybe they lose. But like people look at that, if they're quote unquote right, and they just say, I took the trade on a gut feeling, or, whatever the thing is. Well, the market is at any given moment either going to go up or it's going to go down, right? That makes sense. At some point, if somebody says in 10 minutes the market is going to be lower, or in 10 minutes the market is going to be higher, there's a 50-50 chance of that person being right or wrong. What doesn't get a lot of credit or interest is when somebody can explain a consistent concepts on exactly what would inform their bias, right? So like what levels are relevant? Why, for what reasons live would they expect price to be going higher or lower at any given moment? What levels are important to claim and retest? And then how to structure trades around that. It doesn't really help depending on, I guess, how you like to manage your risk. If up here I say, don't worry, price is going to be higher a month from now. Okay, well, maybe somebody just has the confidence, they're long from the top, and it gives them the confidence to sit in a massive drawdown or loss, or a medium-sized one, and then price gets higher and they say, oof, thank you. But what's relevant here to me as a trader is what levels are relevant, how can I structure a trade around them. I want to actually point out that this, like I long this down here, and I still have some of that long running, is almost the identical price action actually to this, and very similar order flow. This see the structure here, this grinding, little range, grinding structure into an impulse on big bullish divergences relative to this price action. On the 5-minute chart before this impulse is actually essentially what this was. Range. We had big bullish divergences here, which is why I longed on the 4-hour chart. And then a big impulse, right? So same thing, same structures. There's not only one or two types of structures. We have a little bit of bearish divergences forming here. Do you guys find these live streams interesting? Where I'm just essentially stream of thought consciousness jumping between live price action and whatever pops into my head. So a couple things. We're holding point of control here for now. It's not a very well established point of control, right? And by well established, I mean, you know, there's not much more volume here than here, and there's not much more volume here than anywhere else in the profile. But it's a developing point of control. We can start to see positions are opening and closing, and we can start to see that there's potentially a level forming here, right? It's a little bit of a region. Keep in mind this is the 1-minute chart. But here, support, breaks down, resistance, flipping to support, right? Now, this level might become more relevant in the future. I wouldn't say it's highly relevant now, but let's just say that we at least can see price interacting with this level, which is also why it's becoming the point of control, right? We're spending some time here. And so there's more opportunities for people to open and close positions. But we're also seeing a little bit of bearish absorption. Nothing major. But look at this. CVD increasing, price decreasing. We're only talking several million delta, or 1.1 million. Nothing major. But all this tells us is there's some limit selling happening here against the market buying, and positions are opening, right? Shorts are opening, longs are opening, predominantly. Of course, there's always going to be a mix of both, but we have an increase in open interest. So limit sellers are taking on a little bit of risk to hold price down, opening short positions. Market buyers taking on a little bit of risk to market long into this rally. How would I interpret this? Well, sometimes there's not a really strong conclusion to draw from anything. I could say, this may be leaning slightly bearish, or this may be leaning slightly bullish. Would I start coming in and opening up a bunch of trades here now, based on like, oh, we swept this wick? And no, this isn't a time frame that I would start looking to trade. I wouldn't go down to the 1-second chart and start saying, well, I mean, I will say this. These levels actually are surprisingly relevant still. Like, we're going to find technical structures in the 1-second chart. I know that's hard to believe. But still, picking a time frame and a structural time frame that allows reasonable trade setups is still important even when scalping. So like, it doesn't make sense to start scalping this as a range, right? Because we're talking about like a fraction of a price. But what we can do is, for me, this is the long here would be a locked in profits. We have a bit of bearish divergence. It does not mean that price is going to come lower, but I'm happy with that being a reasonable decision. Middle of the range, a little sweep of this wick, a little bit of bearish absorption here. Yes, we have some levels forming here, but I don't need to trade every micro point of data. I can assess the relevance, in my view, of what's happening here, but just because maybe I weight something as maybe relevant or important doesn't mean I have to trade it. I can look to trade some more of the extremes or really clear data and order flow, and I don't need to trade everything. So again, short. We had a kind of a short idea, trading it, taking this liquidity, had to take profits. We have a long idea reclaiming this. There's profits off of this because of this reaction. And I'm not saying that, you're taking these trades and retiring tomorrow after 2 scalps. But a scalping session requires you to take a lot of positions, or not requires you, but infers you will. So we care about the outcome of the end of the session, not the outcome of individual trades, the same way that we do on higher time frames. So there's another concept here, which is no position ever gets completely closed. Every position gets compounded with a break-even stop. So again, there's a risk reward to all of this. So the idea here would be that the short is still open with a break-even stop and 50% closed, 75% closed. There's, again, like someone says, is it better to close 50% or 70%? Well, the benefit of closing 70% is you've captured more profits off that trade. And the, I guess, quote unquote risk is that you have less of a position open for a bigger move. But so the idea would be you're compounding longs down here. You're taking profits, but you're never closing it unless your entry is retested. And so there's a possibility that you end up with a situation like this. Again, these are advanced concepts, but I'm just going to cover them because here we are. There's a possibility you end up with a position like this. You've shorted here, you've taken profits here on this reclaim. You've longed here, you've taken profits at the middle of the channel. You have a break even. This happens, the rest of your short gets stopped out at break even. This happens, you take another short. Okay? This is going to be an example of a short setup that I'm going to explain if we get it. But your long remains open. You take the short, the middle of the channel, and this point of control gets retested. I'm not going to go into this, but if we impulse, this is a level I expect to become relevant. And we have our point of control, we have the idea of an impulse. Impulsing into this level, I just already know that these levels are going to work out this way because I've seen similar price action, which is why I'll be looking for it if it comes. We impulse to the highs, we form a range, we come and take these lows back into the point of control, which is also our GP, and maybe we have a parallel structure, depending on the height of this move and whatever. But anyways, here's the point. So this long holds. You never close this long. You just take half, 70%, 10%, whatever you want to do. You can think as a human being that there's a risk reward to any of these decisions, right? When this happens, if this happens rather, you take the short, but you leave the long running. And if this happens, your long carries. And this trade becomes a partial position. Profits are taken and you have half running, right? So instead of this being 7R, it's 3.5R, so on. Instead of this being 10R, it's 5R. And you assess this position later. But the goal of this would be this. You're trying to have a profitable scalping session no matter what happens, while positioning yourself potentially for bigger moves. This short's in profit, this long's in profit. This happens, you take the short, and you take profits on your short back into this level, you put your stop at entry, and now you're adding to your long. Okay, so profits, long maybe holds, this short gets stopped, the rest of it at entry, it's already in profits. This is a new short, it is now also in profits. Now you add to your long position here, you have 2 longs. If there's a reason to take profits and price doesn't just go straight up, you take profits, you can move this stop to break even and leave this one at break even. You can move everything to your average entry. You can do many things, whether you're managing this position separately or together. There's, again, risk reward. We don't have to go into all of that. But so what this does, then price starts doing this, let's say. You have a short here in profits, a short here in profits at the start of the stream. That's now break even. A short here in profits. And a new long. And say this happens. And you don't get TP on this. This becomes your first losing trade. And this short carries. Okay? And then a new range forms. We sweep this low. You take another long. You lock in profits. You still have half, let's say, of this short running. This is low time frame compounding both directions, all winning trades. So you're only, well, not all winning trades, but you're winning long, you're winning short, and you're building a position. You add back to your short, you have your long from here. We retest this level. You take profits on your short, you've taken profits on, and you just keep doing this on a low time frame. I'm not saying, again, I'm not saying that this is how you need to trade, but what I am saying is something like this is likely to happen during this session. I mean, this is just how the sessions go, but it can be applied to a higher time frame. You can take profits off your positions, and you can remove your risk, and you can add back to your positions. You don't have to do it on the 1 minute chart, but if I'm going to sit here live with you guys for a couple hours, I'll explain these concepts on this, on whatever's happening live. I'm confident in my ability to analyze the market at this rate, I guess. It doesn't take me too long to make, to come to an assessment. And so I'm confident I can explain these concepts on this time frame. Okay, it seems like people are enjoying this live stream. And I don't know, I hadn't looked at the chat in a while. We can see how this is becoming a relevant level, right? We understand the concept here. So really the only short I'd be interested at this point is taking the high unless something drastic changes here. This is shortable 100% technically because we have a GP here. We have highs getting established, bearish divergences. Just seems, well, okay, I'll just, you know what? I'm just going to say this is actually a short. It is a short trigger. The time frame of the range is getting a little bit low, but not only is this a TP trigger for your long, rejecting from this high is a short trigger because, here, let me show. It's just the time frame is quite low. We're seeing signs of absorption. We have a technical level, technical middle of a range. I would prefer just to short the extremes of the range. If you took it, you just lost your first trade. But technically, this is shortable. Technically, this is also longable. It's just the time frame you want to trade, right? There is a level of I guess it's intuitiveness that I do find gets interjected into my analysis, which is you could make the argument for shorting there just as much as you could make the argument for shorting here in some ways for a scalp. But like the trade doesn't feel as appealing to trade the middle of the range and this GP as taking these highs. Oh, hold on. As taking these highs. And part of that is because you kind of recognize the price action in a sense, which is sweep, consolidation, form a point of control, impulse to the highs, with the compelling idea being that impulse to the highs makes this level your GP, and shorting that impulse into this is way more compelling than shorting this, even if there's signs of absorption. So whatever. But again, you don't really need a 100% win rate to be profitable scalping. But yeah, trying not to put in, I guess, personal bias too much. All right, so this was 100% a scalp short I'm going to be interested in. Tight invalidation. So there's nothing wrong. We have to be really careful here when live trading. Paper trading, it doesn't matter because there's no such thing as liquidity. But when live trading, this is a potential breakout that can get pretty nasty, right? So if there's no liquidity to fill your stop loss, price is just going to run through all of these levels. Price is going to run through this area of the chart very quickly. Your stop loss might not get filled. So you want to be attentive when shorting like breaks into all-time highs. Do you need to watch some of these minor highs, minor levels as meaningful resistance, but I'm not going to try to short anything there because we have our value area high here. We have some local highs and probably something along the lines of it's probably between the 886, but not going to short it, but might get a pullback from this 886 value area high. But anyways, structure here pretty clear in the sense that we have a descending structure. We had bearish divergences. We took these lows, long trigger, taking profits, forming a point of control. We could kind of see this level forming as potentially relevant, even on the 1 minute chart as it was kind of happening. We break out this descending channel. We impulse up towards the highs of the range. If we reject from, let's call it right. Sometimes this is cool. Sometimes it's not necessarily going to be relevant. If we reject from exactly 51,839, this becomes our GP, and we retrace this impulse. This would be a short trigger, and this would be a long trigger. If you're compounding your positions, you're out of this short, you've taken profits, and you're in a partial long here. If you're not compounding, then you're out of all positions, right? Because you've removed the risk from this short, and you've removed the risk for this long. And you're potentially looking to short. Now, of course, the benefit of, you could be looking to long too. You could long this as a breakout. So we've taken this high. Again, this is not financial advice, and this is educational, of course. But this would be the idea for a local short trigger. Looking for a rejection here. You don't need to take it on this immediate wick for it to be a valid setup. Can just give price a little bit of an opportunity to show some weakness here. You can turn this into a 2R trade. Doesn't have to be a 4 or 5. Doesn't have to be right above the wick. But if you are a real G and you're really confident in what you're doing and you're fine to take a loss, I mean, you could technically look to enter this trade something like a 4R position. But anyways, so this would be the idea. Now, why are we seeing a spike in volume here and a big surge in in CBD? Well, here we have 18.6 million volume, 5.8 million delta. Here we had 5.3 million negative delta, 8.3 million volume. We have these regions of the chart that have much more volume and way more market positions opening and closing. Why is that? Well, people trade breakouts. Shorts put their stops up here, people long up here, and vice versa, right? So these high volume, high delta areas, that's where the liquidity lies, above these highs and lows. I am not saying price is going to reject here because I don't know, but I hope, as I've demonstrated throughout this live stream, is I don't have to know what price is going to do to trade it. I just have to structure my trade so that if this happens, I close it. If this happens, I hold it. If this happens, I take profits. If this happens, I take a loss, right? And hopefully this makes sense. And what I would say is this. I mean I just know this with certainty. I'm not a what's the term? People think I'm egotistical sometimes when I make like a comment like I traded this price action better than anybody else or whatever it is. It's not I'm not egotistical. I know I'm so good compared to the average person. Um or average trader rather. And I'm so much more accurate. Not like I can have an idea for what I think. Let's just say this 1 minute chart is going to do. I think I've done pretty well so far. I think every time, pretty much, I do a live analysis live stream. People say it's one of the most incredible things they've seen, all this stuff. I do a good job, and I know I'm good, and I know I'm more accurate than, let's call it 99.9% of the people you see on Twitter. But I never talk in absolutes because I also understand that I don't know what the market's going to do, and I can understand the market, and I can have an idea that I think makes sense if this and this and this happens, and I can talk about it and say, if this happens, I will be looking for this, over the next several months. I can have long time frame ideas, but the idea changes if that doesn't happen. So, like for example, I could say, if we hold this level as resistance, this opens up a bearish idea. If you go to yesterday's live stream, but if we start reclaiming these levels with bullish absorption, then you really have to temper those bearish ideas. And I can apply these ideas to the 1 minute time frame. I can mark out essentially exactly. I mean, I actually did it more or less here, not exactly, but more or less from here, how this range is going to develop. Pulled the exact same things, identified all the same structures, maybe did a little bit of scalping in here myself, looking for the impulse, the move up, all this stuff. It doesn't matter, but I can, and I can explain it. I can explain why all these ideas make sense and explain why I'm looking for them to happen. But I guess what frustrates me, and my whole point of all of this, is that I make it so clear, even given all of this, that I'm not claiming to know what the market will do at any given point. I look at this as a game of probabilities. I look at it as things that happen for a reason, and there's ways to make it more likely or less likely. You'll predict what's going to happen next. But I'm seeing people, it frustrates me when I see people on Twitter claiming this is what's coming next, this is what's coming next, this is what's coming next. They're wrong more often by a long shot than they're right, but they're also claiming that they know what's going to happen next. And then people will interact with what my content is and treat it as though I'm saying I know what will happen next, when I make it so clear that's not my claim, right? Oh, all right. So this can get choppy, right? We're expecting volatility around this range. Same concept as this idea of taking these lows, reclaiming, so maybe we get a retest, but this is where you don't want to get absolutely annihilated scalping. Don't need to trade everything. Structures are breaking and not holding. Simply do not need to be in the trade, right? Same thing like on a high time frame. But because what you don't want to happen is, say you're trading this as a range and you're short here. It's been going well. You got this long, you got this short, but then price just starts impulsing, and you don't close your short, just take this loss, get out, wait for new information, or this keeps happening, and you short again, and you short again, and you short again. Well, the structure is gone here. Wait for a new structure to form. You do not need to keep shorting and stay short when the structure you're trading is broken because you just think price has to go down or you can't accept taking a loss. There's going to be other trades, but I mean, you still have to consider being short while this range is holding. We'll see. Okay, let's navigate this for a second. I'm going to navigate this as though you're not trading without fees on Rollbit, but ideally trading, if you're trading scalping like this, you should be trading low fees. As price comes back into the level, you can just close the trade at break even, slight profit. If you're trading on Rollbit, you're going to pay some fees, and this isn't quite enough price movement. It's pretty close, and just reassess this impulse. It's pretty close to break even on Mexc actually, but on most exchanges, like, you can't do this too many times or it's going to chip away at your scalping session quite a bit. But you have to get back short on this if you're just trading this as a range. Like, you're not worried about whether your trade is going to win or lose. You could limit the opportunity for this to become a loss as price starts impulsing back into the level. If you've traded this wick down, if you've traded this, but you're trading this as a range, and so this needs to be considered a scalp short trigger. The worst case scenario would be you don't close out anything early, you don't re-enter, which is perfectly fine, and you go stop, one stop so far, re-enter, 2 stops, re-enter, 3 stops, and you get stopped out multiple times somewhere like this. It's not the most likely scenario in any range, but it's a possibility. But like I said, you're not afraid of taking in this scenario. And when I say you have to get back short, I'm not saying you guys watching have to get short now. I'm saying this is an educational stream. If you're not an advanced experienced trader, this stream is definitely not something that you should be trying to duplicate with live funds. I'm saying if you're scalping this as a range and you aren't letting too much bias take control, if price is back below the range high, you're looking to be short. You're looking to make these decisions very quickly, whether that's taking profits, taking entries, cutting trades, because you're trading on the lowest possible time frame. If these were one-day charts, which the same principles would apply, of course, you're going to have a lot more time to make a decision, a little bit more leeway, right? But there's nothing worse than hesitating, or let's say not setting a stop loss. If you're trading something like this and you're not cutting that trade, and you're gonna say, well, I think price will reject. I'll just wait. I'm not gonna set a stop because I don't want to get wicked out and like the kinds of things newer traders might do. And then this starts happening. You're like, well, price will probably go down. And somehow you've just turned scalping a 1-minute range into blowing up an account, because now you're just stuck in a short as price goes up and you're not even paying attention to structure anymore. And that's the kind of lapse in judgment. You could be 3 or 4 scalps in, things are going well. It takes one moment of a lapse in judgment. And this is just amplified by scalping. Like, let's say, for example, this is important. This is trading psychology. You're sitting here and things have been going well. Let's say you took a 2-hour win, then you took a 4-hour win. Maybe you scalped this from the bottom of the range to the top of the range, and you got the whole thing, and it turned into a, whatever it is. It's a 3-hour win here. Maybe you added on the point of control, and you're just trading like a boss. And then all of a sudden you take a short, you take a stop, you cut it, you say, oh, that's fine. Then you take another short, and you take a stop. Price comes down, you take a long. Maybe you're still up for the session, but you're like, man, I just took 4 trades, but the trade worked right after I stopped myself out. You're getting frustrated, and you say, I'm going to be a little more flexible with my position. And so maybe price comes down here, you take a long, You put your stop a little wider, you get stopped out, and then you say, you know what? This is really annoying. It happens again. This time you just remove the stop and you say, I'm not going to get wicked out. We're in a range. Price is going to keep ranging. Oh, this happens. We'll bounce. And all of a sudden, you're just sitting in a long from up here, and you let price, and you think, well, if I cut it now, I'm going to give back all my scalping profits. I'd be longing this anyways, so I'll just count this as a new long, and maybe you add to your long. And then this starts happening, and you think, well, the loss is just too big. I mean, I've given back my whole week's profits. I'm just going to sit in this position. We'll definitely bounce here. And then all of a sudden, you're just looking to get out at half the loss, whatever it is, and you just sit in a position. That was a 1 minute scalp, and you blow up an account. These are the kinds of stories you hear. These are the kind of things that happen. I took that long. I pulled off my stop loss, and I couldn't close it. And it's like, I would way rather just take the little wick and just re-enter, right? It's frustrating when you take a little wick and you have to re-enter, but what's the alternative, right? You're just, you're making the decision quickly on a 1 minute chart. I would just say, like, trading this low time frame stuff is, I do not advise this is where new traders start live trading. You should be paper trading. You should be learning how to execute, pull these ideas on live charts, but paper trade this stuff, because the concept, it gives you just so much exposure to the concepts. And you can say, oh, this is like the same thing I would do on a 4-hour chart or a 1-day chart, but I just get to practice. I get to do it over and over again on a low time frame chart. And, people will say, they'll say things like, well, what's more profitable, scalping or swing trading, or what do you do? And I just say I do everything, but like, I can't take a swing trade every day based off of certain styles, right? Because price isn't interacting with high time frame levels every day. Like right now, yeah, we got some maybe ideas up above us at 52,200 high time frame structure, but there's not a lot of high time frame structure. High time frame structure is all broken. So today, if I want to trade, I can't trade high time frame structure. Sometimes price is interacting with high time frame structure, and you can trade these daily chart levels as daily chart levels, but today I can't. And over the next week, we'll form new daily chart levels. Okay, so anyways, let's get back to the live chart here. We're in a scalping session. We can potentially turn this scalp into a swing trade, but we have to be open to taking profits from it. And so what's the benefit of trading this way? Instead of, let's just say setting a limit order here, okay? Because this short has the potential, if this happens, of turning into a 40-hour trade, an 80-hour trade. You get the idea? But it's not likely. It's just the potential. So what is the case where this would happen? And you're not manually making the decision to turn this scalp into a swing trade? Well, the case this would happen is if we run this level. No reaction, and you just hold the short. And you just turned a scalping session that was on its way to being, if I do say so myself, a great session. Even if price doesn't nuke, and you've just turned it into a monster trade, or a session that ends into a monster session with a monster trade, which is you've turned a scalp into a swing, which there's no better feeling with tight invalidation, and you have a setup somehow, some way that people will tell you is impossible, that is a short from the 1 minute wick high with a 0.26% invalidation. I'm not saying this is going to happen, by the way. I'd say it's relatively unlikely, and the key level to watch here is retesting the POC back into this GP. I explained this earlier. Hopefully it's not a surprise. And this would be, where you got to look for maybe adding to those long positions. We're not predicting what's going to happen. We're just trading the levels, cutting if the trade's not working, adding back if it is. But anyways, I digress. Somehow you have a short position from the exact wick high of this move with a 0.2% stop at 40K, because what I'm just saying in this scenario, price breaks these levels, retests them as resistance, breaks, and we reverse this entire move. And people will say that this is impossible, but yet here we are sitting doing it on a live chart, trading the 1 minute chart, making completely reasonable decisions. We're not just firing random trades off at every 1 minute wick trying to catch the top. We're making reasonable decisions that are profitable, even if price just ranges here and there is no big breakdown, and price even breaks out, and we maybe even just end up with some longs running. So do you see the powerful concept here, that it's not about scalping the 1 minute chart? It's about how you might manage a position, giving your positions the opportunity to be big winners, but just make a reasonable decision and take profits. When I shorted here earlier, I'm willing to give my position the opportunity. I will say, technically you can call this the middle of the range. These are both deviations. And so this is an important level, potentially an SR flip. For the same reason that you would consider looking at taking profits, although here I wouldn't yet, but I would be very open to it. On the long at the middle of the channel, you could take profits on the short. Sorry. But so when I took this short earlier, sorry, I'm jumping around a bit here. When you took this short earlier, you have the possibility of a breakdown. But when price reclaims, you just take profits. And that's why I explained I did. If price had nuked, maybe I have a partial open there. Even if I don't, it's okay. You can commit to this time frame you're trading. And you have a profitable long, and maybe you start looking at taking profits from this short position, and maybe you get a chance to add back to it, and maybe this 85R win turns into a 30R win when factored for a TP1, but you just carry on your scalping session, and you don't concern yourself too much about the long-term results of these positions. You're just looking to have a profitable session, but giving yourself the opportunity to get exposure. But the amazing thing about managing a position this way, and how many times have we seen these exact structures play out on a high time frame, is you can apply the same concept to a high time frame position management style. You just say, well, listen, if we get strong continuation, I'll hold my position. If there's signs of weakness and we can't reclaim this level or whatever, then I'll take some profits and I'll move my stop. And if I get an opportunity, I'll look for a new setup and I'll add. And over time, you're building positions both in profits. You might be short, you might be long, you might be both. And you're just making reasonable decisions. So anyways, got to take profits on this short and look to add back to it potentially, but perfectly happy not to if I don't get the opportunity. And I know it's just a wick, but the problem with this time frame is that you have to make the decision quickly, or it's so inconsequential to take the profits that you wait 30 more seconds and price is back at your entry. So you just have to make the snap decision. The difference between here and here, not so big. When scalping, the difference between here and here, much more relevant. So and you just remove the risk. And so how does this look as we move forward here from a scalping perspective? Well, I could reassess on a retest, just adding back, and maybe put some of those profits at risk for this position to resize my position. If there's no reaction, well then I just have a small win. It's okay. I can always re-enter. But I can't freeze here, right? I gave price a chance to have strong continuation to this target. It didn't. Reassess. I'm happy to just keep this a winning session and not get greedy because I'm scalping a 1 minute chart. So hopefully that makes sense. And for anyone new tuning in, these are ideas you would apply on a higher time frame chart as well. But we see this idea here, right? So we're identifying, we're saying, well, this is the reasonable course. I'm going to remove this descending channel, but it's kind of a nice little idea there while it lasted. So we have a little range. We had bearish divergences forming here. Makes sense. We had the idea of a long on a reclaim and retest of this level. We see this forming as a point of control, but we had this little wick into what is the middle of the channel, and it was also the GP of this move. So we got a reaction, and price formed a new point of control. Our new GP is right around this consolidation, but we took profits on our long based on this reaction off of the middle of the channel. And so is it just as reasonable to take profits? It took them a little higher, but off the short because of the reaction off the middle of the channel. If price had nuked through it, okay, you know, hold it longer. But anyways, for the same reason, makes sense. Okay, but let's just notice a couple things here. Starting to see some bearish absorption in order flow, right? So we have longs opening. CBD is making a higher high. Price is making a lower high. The candle's not closed, so this could change. But right now we're seeing limit selling coming in to this level. Makes sense. Top of the range, retest. Definitely do not want to be closing this entire short position. Now, if you want to be really aggressive, you can look to just reopen the position. This is a very small, or reopen, sorry, the add back to the position. It's a very small difference in price. And put your stop up here. But then you have to start to have the risk reward make more sense. Let me just delete this. On an add, you have to do two things. You have to start targeting a little lower. If you want to keep your invalidation above these highs, this is a very small region of the chart, but you have a bearish divergence. So there's a technical reason just to stay short here. You have we've entered back into the value area high of the range. You still have your invalidation. You have some bearish divergences, but the risk reward of an add back here starts getting a little funky. So if you want to keep your invalidation above the high, then targeting into this range low becomes a little bit more sensical, or you just cut it on any strength at a partial loss. Oh, I'm on the wrong screen. Sorry. So you size it for this. So this is a new concept we're introducing on this live stream. I've talked about it before. So you have two options. You have to kind of make a case for this trade to have a reasonable reason to be structured more like this, to a retest here. Or it starts to become, you start to wonder why you would take the trade if this is the setup, right? Like, it's a 1.7 hour trade, so you're making, $1.70 for every dollar you risk. Not quite as appealing as a setup like this, where we can already lock in close to a 1 hour setup, closing half of it around here, right? So, but you might have a reason. So anyways, the point is, you could structure, and this, it gets actually a little more dangerous with scalping, but you could structure your trade so that this is where you're taking your stop loss or your full 1 hour loss of your scalping session, but you can still close it at a partial loss. So you essentially close it like at the cost of fees if you don't get an immediate reaction, or you close it if you claim the value area high, this region of the chart, but you size it. I'm actually going to draw this out a little bit to explain it, but you size it with this as your invalidation. So let me give the example. And I tried doing this on, I was updating this way on in the Discord the other day, this idea of like a distinction between your sizing, which is your invalidation, and when and where and why you stop out a trade. And so let me do my best to introduce this concept here, because it's an advanced concept, but I feel like it's an advanced live stream and we might get caught watching many minutes of ranging here. Okay, let's just say you're trading a $100 trading account, just to make all the numbers very easy. And I'm going to round up and down numbers just based off of this, but it's going to be important for understanding sizing for those who just don't know anything about it. So let's just say that this is your trade setup initially on the short. Shorting the top of the range. Your stop loss, again, I'm going to round these numbers, is 0.2% away, let's say, on this scalp. And you have a $200 trading account, or $100 trading account, rather. If you want to risk 1% of your trading account, if your trade gets stopped out, and maybe you want to account for fees or whatever it is, well, then you would go your entire account on 5x leverage on this scenario. I'm not saying that this is going to be a likely scenario for mini trades, but we're just doing the math here so we understand sizing. All right, so $500 is your position size. If your stop loss gets hit, you lose, not accounting for fees. So you're going to have to, let's call it 1 to 2%. It's a bit of a region. But you have a $500 short here. If you get stopped out, you're going to take a 0.2% stop loss times 5, right? Which is 1%. 0.2. So you have a $500 position with a $100 trading account, and you're risking 1% of that account. To make, essentially, let's just go like this to make it really easy. Say your target is 1% away. To make 5%. So let me go like this. So let me just put all the numbers. $100 trading account. We can take a few minutes to go over this because it's an important concept. I'll be wary here. $100 of this range breaking out. Wick, interesting things happening. $100 trading account. If your stop loss is 0.2% away, I'm going to just tell you guys right now, your stop losses will very rarely, if ever, be 0.2% away. Don't take this. The thing about a 0.2% stop loss is you're managing a trade on this time frame where you also care about a 0.5% move, right? And the reaction price is getting. Don't take this to mean that you should be trying to set up all your trades with a 0.2% stop loss to make a bunch of extra money. Stop losses always need to have a technical reason for being placed where they are. They can't just be arbitrarily start firing off 5x trades with a 0.2% stop loss. I'm giving an example with this setup, and so we can understand how the math works, right? So you have a $100 trading account. Your stop loss is 0.2% away. You want to risk 1%. You do a $500 position. If your stop loss gets hit, how much are you going to lose in this case? Well, I don't know why I thought you guys could see my calculator. I pulled it up on the screen and I was like, well, and then typing the math. Well, $10, right? You're going to lose 1%. Right here, you're going to lose $10 on a $500, or sorry, $1. I put in the calculator wrong and it makes sense. $1 plus fees, looking to make $5. Now, what you can do when we might have to come back to the live chart. What we can do here to reduce this risk more, you can size for this, but cut here, right? So let's just say you're sizing for a 0.5% stop loss, but you're going to cut locally if there's any signs of strength. I'm going to explain why this will give you even more flexibility with the position. Yeah, there is a big level up above here. I should actually just throw it on the chart really quick. Well, it's just a big pivot high. It's worth looking at. I also am interested in continuing to scalp this, but I'm just keeping an eye on things here. I'm back short, but I'm scalping this, and I'm happy to do it. But anyways, so let me explain this concept, finish explaining it. Let's say that you've added back to your shorts here. So you took profits because of this reaction off the middle of the channel on this scalp short. For the same reason you took profits on the scalp long. But you see something and you want to add back. But this is kind of a questionable setup. Well, you can still size for, let's just say, a 0.5% stop loss. So if you want to risk 1% of your trading account with a 0.5% stop loss, then your position size is going to be $200, right? This makes sense. If your stop loss was 1% away, then, well, if price hits your stop loss, you're going to lose 1% of your account with a $100 trading position. Sorry, I do need to just manage this for 1 second. I'd rather take a partial here than be short on a breakout, a partial stop, just because of liquidity concerns. Yeah, so I'm just going to stop that out right around break even. So I'm not going to keep shorting this for now. I'm just going to wait for new structure. We had the initial reaction, initial wick, and there's no follow through. We're kind of consolidating here. I'm happy to miss this short and assume that I'm going to get more opportunities to short off of other structures. But this is just a time where you have two options here. Well, let me finish this example, then I'll give the options that I think are both reasonable. One is just having the short with a bit of a wider stop. I'm a little wary of the trading with bigger size that way, because that's a recipe for just getting wrecked by slippage. If you're trading really small size and whatever, then it's not so bad. But anyway, so you have a $200 position here. This is an important concept. I need to finish it with a stop loss 0.5% away. And you want to add back here. So you're sized for this setup, but as soon as price starts showing, let's just say your idea was to add back to your short based off of, and this is especially powerful on Rollbit, but it's powerful on any low fee structure. Let's just say that your plan was to add back as price retests this value area high with a little bit of bearish absorption forming. But again, if you take too many setups like this, well, you're really doing this, and you're taking essentially a 1 hour setup, and you don't have asymmetric risk reward in your setups anymore. You have no room to take profits on a partial move to your stop, or sorry, to your target. And so what you can do is you can size for this, but you can cut early at a partial stop. So what this allows you to do is have flexibility where you can say, well, if we have a quick rejection from this level, then I'm going to cut. But if price starts moving up through these levels, I'm just going to cut that position immediately. And it's not going to be a 1% stop because my stop loss isn't sized to be here. My stop loss is sized to be above this high because that's really the invalidation of trading this range. But let me reassess what's going to happen here until I see how this move plays out. We had an initial reaction, bearish divergence. It would sort of be like the equivalent of doing this. Let's say you wanted to trade the middle of this range. And you say, well, I'm going to short the middle of this range. And if there's a nice reaction, I'll hold it. But if we start showing signs of strength, I'll just close it. But I'm not going to short the middle of the range necessarily like size like this, so that if price goes up 0.4%, I'm 10x leverage, I'm going to take a 1% stop loss on this position, or 20x leverage, I'm going to take a 1% stop loss. It's maybe sized more like this, but it's managed within this range. And the same thing with longing here. So you might long this with a little bit of a wider stop, but willing to cut it for many reasons at the middle of the range. Like maybe you long it like this, but you don't necessarily have to wait for price to come all the way down to your stop loss to hit it. You can cut early for a partial stop for many reasons. So this is an important concept, that your invalidation can be used to size, but it doesn't have to be the only reason you'd ever cut a trade. Kind of an advanced concept, but there we are. If you're just tuning in, I would plan on coming back and watching the beginning of this live stream through, because we covered a lot of important concepts. But we can see here some volatility. You know, there was certainly ideas of taking a short here at the highs of the range, but this short, there's no reason to get stubborn about this short. You know, do you really want to just keep shorting into this over and over and over again? Price is now starting to claim this level. It's consolidating. You don't need to short the top. Like this is one of the ways that you also get trapped trying to like get the short, quote from the top, where you can just say, I'm happy to miss the short. I tried it, you know, I took a partial win on a sign of strength and a partial loss on an ad, and I'm just going to let it go and let new structure form. So there's a little bit of discipline there. You know, things are going well. You have some structure. There's going to be lots of clear setups in the future in theory. And so you've got a long setup from the lows. You've got a short setup that is now stopped out with partial profits, short partial profits, and a short at loss. But again, for me, why be... Yes, we have a reaction. We have a little sweep of this wick. Price is starting to reclaim this high. Why be short here? Like, say, on this sweep when this is happening, right? Just doesn't make sense. It doesn't seem reasonable to me. It seems just a little too risky. Like, there'd probably be a little bit more of an argument for a long, frankly. If I had to take a trade here, it would be a long trade, anticipating another impulse upwards with probably sized a little wider, but looking for some of this liquidity to be pressed here, but willing to cut it maybe early at a partial loss if I didn't like the looks of a retracement. Sized reasonably. I'm not going to take but anyways, just saying that for all the reasons that this would be a short trigger for me, this is not, right? While price is breaking out and holding this level, I'm not going to be short. Willing to try it on that initial reaction, not willing to try it here. But again, I also don't like this as a long trade. I do not like trading these low time frame breakouts as as a long scalping setup. And the reason is price likes to get really volatile around here. So I'd way rather just have a partial long from down here and look to long if we do in fact get this move. And if I miss the short here, doesn't mean I can't be interested in the long. Now, I do want to say a couple things. I would not trade. Like, for example, if we're looking at a 1 minute chart. If I was going to be trading this Matic long, let's say, this is a 4 hour chart. So this level, I would not be trading this way on a high time frame setup. So for example, there's 66 days between these lows. If I'm looking to trade the reclaim of this level, I am not going to go into the 1 minute chart and have this trade setup planned. Say I'm taking this long, but then be on this chart at the 1 minute chart saying, okay, I'm going to close the long because price went 0.1% below this level. I'm 0.2%. But the relative the ratio of these levels drastically changes based on the time frame, right? So this price action relevant on this chart, it is not reasonable to be structuring a 2 month range level that you're trading based off of this type of price action to make your decisions whether to be short or long. You would have a much wider stop because the structure you're trading looks like this, right? Does that make sense? Same idea, different time frame. And so you're not going to be making decisions based on the 1 minute chart on a Matic setup like this or on the so long that I explained either, right? These are high time frame levels filling this wick. Matic's kind of interesting here. Same with this, right? This is a 4 hour level. So, if you're looking at shorting Sol here, sweeping this wick, price comes down, you don't need to be going, well, in my view, you don't need to be going down to the 1 minute chart and making your decisions based off of this type of thing. Got to be really got to be careful here in a scalping session. Certainly got to be decisive. I'm not going to chase the short here. And what I mean by careful is you're either going to take the trade or you're not. But what I'm not going to do is like start taking like this trade over and over again, which is shorting here because like, oh, we've broken back down again, I'm going to get back short. Which is very different than like, even for example, this trade when you're scalping. Like this and this is a very different trade. And this can actually even be closed. I know this sounds crazy, but if like I have scalped the roll bit 15-second chart because we have structures here, and you're going to get annihilated if you're trying to scalp in this price environment. If you start setting your trades up like this, waiting 2 or 3 minutes, trading this structure, but taking this short instead of something like this short, and instead of taking profits here, you're entering here. So again, good to be decisive, and this is where like I just know a beginner's going to get chopped up trying to do this live is they'll say, oh, this I get it. This was a long trigger. This was a short trigger. This was a short, closed in partial profits. Now I wait for price to break down and I short right here. And somehow they spend an hour doing this and all of their trades look like this. And then they get stopped out or they close at a 1 hour loss here. And I mean, we have ideas, right? It's a retest. This would be a better entry than this. Like this would be a technical entry. You have a retest, but I'm not taking this trade. Just don't want to overlook that opportunity to point this out, that this is a swing failure retest again. But anyways, they end up in a situation like this where their trades look very different and they're not actually trading precisely, and they're getting more scared. Losses are piling up and they're just closing, opening random trades in the end. Then they think, I've been wrong every time. I'm going to start trading the opposite. I'm going to actually just long here. And then price just goes straight down and you get it, right? So again, I do not intend on doing that. I'd way rather just let a trade go if it's not precise and well thought out. And that goes from the 1 minute time frame to the 4 hour time frame. But anyways, so we can notice a couple things here. If we have a technical idea, right, which is we have an ascending structure. It's on the 1 minute time frame, and we've swept the liquidity above these highs. We have started retesting the highs on the 1 minute time frame, which is still relevant, just like retesting this low is. But we're seeing some aggressive selling coming in on the lows, and it's nothing major, but what we have is a 3 million negative delta decrease in open interest candle right here. People start selling into this level. We have some signs of some limit buying pressure here, nothing definitive. And so the question is just, is this short compelling? Well, in the context of this local price action, no. But in the context of the possibility of holding it as a swing trade, it starts to become more enticing, right? And this is where you can get kind of trapped, but it's like, well, this trade setup I could let go, right? Which is, here to here. That's not a very compelling trade. But like we talked about earlier, you have the opportunity to potentially turn it into a massive trade if we break down. The problem is if you keep making these decisions this way over and over and over again, you'll be able to justify taking any trade because you're like, well, this doesn't look very good, but if we have a huge move, then it looks great. So you can start making the decision to start sizing your trades based on your quote-unquote data or your conviction. Well, because you could say, well, listen, we have a range forming here. There's a chance that this trade could be something like this. Do I want short exposure here? How confident would I be to trade this setup like this? And so people say, like, do you size based off of your data or your conviction? And I would say no. But in some sense, I do, because what you would do is you wouldn't invalidate your trade based off of this time frame. You start invalidating it off of a higher time frame. You might still close it early at a partial loss, because this might be subtle, but because the reason that you're taking the trade has now become not that you really are interested in this scalp anymore. You could kind of take it or leave it. Like if you missed the move from here to here for like a 1.9 hour setup or 1.5 hour setup, you could sleep with yourself. But you're more interested in the higher time frame idea. Well, then don't size your trade. Don't confuse the fact that yes, you have some low time frame ideas for potentially taking a short here, but you're not actually interested in the low time frame trade anymore. You're interested in the possibility of a breakdown, and you could use the low time frame target to kind of cut some size or hedge back long. So hopefully this idea is not too subtle, but it's the idea that in your head, maybe I was taking the short here because I was just interested in targeting here. But suddenly I'm interested in the short now, not because of this level that's 0.5% away or 0.75% away, because of the potential of a breakdown. And so now I need to really think about why I would size this to risk 1R here, and why wouldn't I start sizing it to take a partial loss as a wider setup anyways. So because the reason for the trade has changed. It's not a particularly compelling scalp short anymore. Gosh, dang it. Oh, I've been on the wrong screen for so long. Yeah, I just noticed. Somebody just commented too. All right, well, so be it. You'll have to figure out what I was saying. What I was saying is this short isn't particularly compelling to me. Let me just do this. But the only reason it could seem compelling is because what if this is just a range high, we sweep it and we break down all the way down here? Well, I'm not being very reasonable if I put my stop loss size to be above here. If I'm actually really interested in the potential of a bigger breakdown, and so maybe because I'm not particularly actually interested in the local setup here, like I might have been with this local long setup or this local short setup with a little bit tighter invalidation, maybe I wouldn't size a short here if I was going to take one, and I would size it for a much wider stop. Doesn't stop me from taking a partial stop on a sign of strength. It's an advanced concept, but what I'm trying to do here is delineate the difference between your invalidation, which could be much further, which dictates your sizing. So you calculate your invalidation based off your sizing, or your sizing based off your invalidation, and where you actually stop out your trade and why, right? Like, there's nothing wrong with taking a partial stop and just saying, well, if, let me just give a perfect example. This is going to help crystallize this idea. All right. Price is coming up here. You're going to take a short. And let's just say there's another high up here that you'd also be interested in shorting. And you think to yourself, well, you know what? This is a valid trigger. I also want to short this level up here. I'm going to, instead of sizing like this, I'm going to size like this, risking 1% if my stop loss gets hit up here. That does not mean I need to close my trade up here. What that means is we get a rejection, and then I start seeing this level taken, reclaimed. There's a bullish divergence in CVD. I'm just going to close my position at a partial and reevaluate what happens up here, and I can re-enter. Instead of taking the 1R stop, I was interested here in initiating the short. That my stop cannot be at my entry. It has to be somewhere reasonable. I'm going to put it up near this next level I want to trade, or slightly beyond it, whatever it is. But if the context changes, I'm perfectly happy to close this trade for that reason and reevaluate. If price never breaks back below this level, I'll never reopen that trade again because that idea is invalid, and I'll just wait till the next level. And so I've gotten out of this trade at a partial stop loss. So this idea is simple, right? The context has changed. And so this is the same idea of sizing wider than your stop loss or your actual, where you might cut the position is. Does that make sense? Hopefully. For some reason, I do not know why, but there are people who have found this idea really confusing, which is the reason you enter a trade can change, right? Like, let's just say price is consolidating and wicks through the range high with bearish divergences in CBD. So you initiate the trade and you have your stop loss. Let's say there's consolidation from another level slightly above that. Then price starts consolidating with bullish divergences 4 hours later and running back up, reclaiming support. Well, stopping out your trade is essentially a stop loss. It could be in slight profits, it could be a slight loss, it could be at break even, it could be in deep profits, but it's before your stop loss. And you could stop out your trade for a myriad of reasons at a profit, or take profits for a myriad of reasons. And so it's just that same concept. It's not sizing every trade to have your invalidation be 0.1% above it, because that, of course, we all know it doesn't make sense. Giving a little bit of room to make the decision to open and close your trade based on how price action develops. And if the context changes, just open or close the trade. Anyways, I'm not going to go through this too much longer. This concept, I'm hoping it's making sense to people, because your sizing is really important. Like, if once you start sizing unreasonably, then your invalidation's unreasonable, then you're going to start racking up losses. I'm just not seeing a very compelling reason to take new positions here, frankly. The New York opens in an hour and a half. We're seeing it's just nothing really that compelling. I mean, price is breaking this range low. I think the short, I like the short on the wick. I don't like it as much here. I would probably just be more prone to look for, we have a major high here, reevaluate after a third sweep of the highs. Like, if I'm in this trade and price just wants to claim levels, give you a trigger, claim levels, form a new POC, hold support, we identified this at the time, impulse again, that's a little more compelling, just to like let the trade run, and not just get out of it or get disinterested in it. But this just kind of wicking these highs over and over again, consolidating up here, not as compelling to me. Just let it play out. Let new structure form. I am getting a little worn out by this live stream. I'm going to be honest. It's not hard per se to talk through all of this stuff. It's just, after 3 hours, like, I wouldn't mind just blinking a little bit here, having a cup of coffee, and whatever. So, again, worth watching here. I'm not interested in shorting this retest at this point. We have a couple reasons. It's not about what's going to happen here. I mean, it's the same thing like this long, it's a technical long trigger. You could get a technical trigger here on the retest, but let's just look at a couple points. One, price is consolidating. It's the third test of this level. The first wick, I like trading that. I like trading these first reactions. These reactions, not so much. It's just a little bit too much time being spent up here. Doesn't mean that price has to break out. So let's look at the volume. There is nice volume on these wicks. This volume, it just doesn't look very like liquidity grabby. And so I'd be more prone to look for a different setup for a local short. And if I miss a short, that's all right. We also have some of the volume in one of these wicks, just a big negative delta candle, market selling. Sign there is a trader here, limit longing. And so for those reasons, although the setup is probably technically valid, it just doesn't have it just doesn't seem like a super compelling setup for me. So knowing that I can get into setups I feel really good about, and where price is really quickly moving in my favor, I would just let it go. Now, I will say earlier I said I'm not going to use I think there's still, I don't even remember what the benefits are of all these links. I think there's still a Rollbit link, like a partner link in the Discord or somewhere, but I don't even know what it is. But I said that I'm going to do these updates assuming you're not trading on Rollbit. If you are trading on something like Rollbit where you can get in and out of positions for free, you have way more flexibility, right? But even on a low fee exchange like Mexc, one, there's slippage. There's no slippage on Rollbit, and two, so that's always a possibility. And two, there's even with the low fees, like you don't have the flexibility to just be opening and closing positions based on any little reaction for free. So trading on Rollbit might be a little more interested in that short. Trading on Mexc or a traditional exchange like Bybit, well, I won't even say traditional, but with a higher fee structure, you gotta be a little more careful in a scalping session. I mean, obviously, in hindsight, you're always going to think to yourself, wait a second, how am I not in this short if price just nukes? Looking at the structure, right? But where the confidence of not taking, like, for example, price breaks down here, maybe comes and retests this level, and I missed the short. I don't care, obviously, right? Because, well, for a few reasons. One, we're looking at the 1 minute chart, and this is a 0.89% range in price. This type of price action is happening every day, all the time. There's certain times where it might be more, there might be kind of a higher potential benefit to scalping because you maybe have a little more likelihood of scalping yourself into some bigger positions or bigger moves rather. But I also have the confidence that that I'll be able to get into positions anywhere on the chart, not at anywhere in terms of opening anywhere, but there's always going to be opportunities, and that we have an impulse in a 1 minute chart here, and in a few hours we're going to have an impulse and a 15-minute chart with established levels, and in a day we're going to have a 1 hour and 4 hour chart developing, and in a week we're going to have daily levels developing, and all of those will be tradable. All right, and I don't have to form a huge bias here. I tried the short, took a partial profit, gave some of that partial profits back, and now I'm just maybe sitting with a partial long. Point of control shifting a little bit, worth noticing. You can repull these levels same way you would if you were trading a higher time frame. So one thing I noticed, and I shouldn't maybe read into it too much, is as the stream goes on, obviously people come and go,
But as the viewers kind of tick down, I assume the stream's just getting less interesting, and maybe I'm, you ramble on for a few hours. People can only take so much. Uh, just joking a little bit, but maybe. How are you guys feeling? Some of you've probably been here for a long time. Some of you have probably been here for a shorter time. Is this is this about a good length for a long stream here? I'm sure some of you'd like me to sit here all day. Maybe we can wait for a resolution locally here. Cover a move up into the highs or the lows. But does it make sense why, even if I was short here, let's just say I was back short here on this retest, and I didn't just cut my short around like entry or something like that. Why I would start saying, okay, well, I want to see some direction form here. So let's just pretend I'm short. I didn't make the decision not to get back short. Price is consolidating. Point of control's kind of shifted up. We have kind of local levels forming here. We have a level down here of interest, which would have been maybe a target for that short first target. But why I would start to tell myself that I want to see like some of this structure breakdown, or it might be time to consider doing something with this short, because if we start consolidating here, do I really just want to be sitting short and not reevaluating that position versus say this long, if you take a long and price is reclaiming levels, holding up levels, a little more signs of strength and direction, even with this short idea, right? Where you see some of the weakness immediately, and your thesis is playing out much quicker. Taking a short here, price is grinding down, you're grinding towards your targets. That was at the start of the live stream. This long idea, there's a big difference with this happening. So I'm not saying that if you're in a short now in this, you'd necessarily have to just close it immediately. But the idea being, you can get into trades that work or just start moving in your favor and are working quickly. And that is time frame dependent. So that's a different time frame than if you're trading a 4 hour chart than a 1 minute chart. But if you're on the 1 minute chart, you kind of want the trade to start working immediately. And maybe you're happy with a small win here and the opportunity to reevaluate rather than holding that trade as well. I'm not saying that that is the best decision because I don't know what's going to happen. Price could break down immediately. But I'm saying you're trying to just make that reasonable decision. Maybe a bit of a triangle forming here. Maybe we get the little liquidity grab or the vice versa. So if this was me, and I am me, it's a little subjective, but I'm not sure if I was, I'd probably be just looking to close it, and I'd be interested in looking at maybe something like this for a short, or this major high time frame level here, or this for a long, or a chance to add to the long, right? There's a long trigger. Here's a chance to add. Okay, so Raphael says, just entered 20 minutes ago. This is amazing to learn live trading. So I would suggest go back. Anyone new into joining the live stream, go back after this is done and make a note to go restart it. Because we started it back here, and we had some pretty nice ideas of this range forming and trading around it. All the way from the short ideas here with a long trigger here to forming this level, which is a point of control, and maybe looking for like an impulse up through the range highs. The idea was to come back down and retest this. We can shift that perspective. The level's still relevant, but maybe be open to this price action forming a little differently. But explaining the concepts behind those levels, super important, right? And then explaining that this is certainly not how I would suggest any new traders start trying to live trade. But it's a good learning opportunity. Yeah, I agree. Notes, he says, beginning of stream was when the range started to form and with more volatility, so a great place to start streaming. Absolutely. Definitely nice volume coming in here. The high time frame level, it's not a huge level in some sense, maybe in terms of confluence, but it's our last clear impulse high, right? So this was one to watch and to trade around on a high time frame, and I did just that, looking for that short on a sweep of that high and rejection. And this is the next level to watch, and arguably the last level to watch. We have a series of highs here. It's not unwise to mark this out as a region. This will be clearing a very high volume area on the volume profile. We have our major highs. I feel like this is a little suspect to consider a major level, although of course you make an argument for it. But if we're up here around 65K, gotta expect the highs are probably getting taken. So anyways, high time frame levels, not many of them left is the point. We have this level that we've cleared. We have this level above us, this level. I'm talking just horizontal structures. Now, this also should make sense to everyone that as time progresses throughout the day and we get more structure here, it's perfectly reasonable to start using the higher time frame charts, right? Like if a 1 minute chart is much more relevant in this type of price action when there's one 15-minute candle. But when there's 40 15-minute candles, then a 15-minute chart starts being a perfectly reasonable place to start structuring ideas. On the 50-minute chart, this looks kind of very shortable, obviously, as it does on the 1 minute chart. Looks like a clear range idea. And maybe I'll regret the day that I didn't short this retest. But let's just let this little consolidation here resolve. Let's see if we get this kind of move into the impulse lows, back up to the highs of the range, or we just break down. We'll analyze this little local resolution here, and then I'll probably end the live stream. I wouldn't mind just kind of had a busy morning, had to run back to the charts, literally, and then I wouldn't mind just taking a little bit of time to myself before the New York Open because, well, the real trading session is only just about to begin. See some of this structure breaking. So I'll do the 1 minute, but again, this is just, I like to pull these little structures more so because, like something like this, it's more so because, not because I'm going to trade this idea. This is the kind of thing that a retail trader is going to be looking at. Trend lines can be okay, you know, these kind of ideas can be okay, but in the same way, like a retail trader might really be interested in shorts here or shorts here as a sign of weakness, especially shorts here. And I'm not saying I'm going to be right, but I wouldn't be surprised to see an increase in selling pressure here and then like something like that. I'm not saying that will happen, but I just like to pull it to kind of see what are the kind of ideas that people are going to be, normies are going to be looking at. And I'm not going to get caught in a scalping session. I'm not saying this trade won't work. If you're in this trade, that's perfectly fine. I have no idea if it's going to work. But like constantly trading ideas like this, right? Like, oh, we're breaking down this trend line. I have a stop above the consolidation. This is the type of trade you might see. Not saying it's not reasonable. It's just not my style. Because what happens is you end up in like this kind of scenario where you have like this trend line drawn, let's say, and you're like, okay, well, we broke the trend line. I'm going back to here on price. We broke the trend line, we retested it, and then I put my stop above this high. You know, actually, if you had structured above this high, but let's just say you put it above here, above the trend line breaks, you get a retest, and you enter your short, and if realistically you probably don't enter right on the break here, and you get stopped out, and then you pull a new trend line, you enter here on the break, and you put above the consolidation, and you get stopped out. And what happens when you trade that way, from my perspective, I'm not saying there's never a time or a place to trade a break of a trend line, because I've certainly incorporated such an idea into some of my setups, but it's I'd say more rare. Is what's really happening is you're just shorting the bottom of every horizontal liquidity grab. Short, and a horizontal range forms. Simplest way to look at price in my view, and somehow not the most common way. And you just end up taking stop after stop after stop. I'm not saying this will happen. I'm just saying this is why I don't like trading that way. But there's a time and a place for such a type of analysis. It's just not what I defer to. All right. Well, I'm only going to stay on here for so long. We can notice a couple things though. Lots of selling these last two 5-minute candles. An order flow we see. So everything is relative on a chart, right? Like our levels are relative. Say you're pulling a fib. Well, your fib measures the distance between a particular high and a low, and your fib could be your 618, let's say, could be many percentage points away or 1 percentage point away. It's relative to the chart that you're pulling it on. And the same goes with volume, and the same goes with delta in that volume. So here, 3.9, 3.5 at these lows, 3 million, here, and then at the highs here, 5.8 million. Well, this is relatively high negative delta compared to the average candle here, right? These 3 million delta, but is this very high delta in a candle at a low? No, it's just high locally. What's high delta? 26 million is pretty high delta. 62 million volume is pretty high delta in a 5-minute candle on this breakout. If I saw 62 million volume come in right here and 26 million negative delta and price didn't move, well, then I would be very interested in just a long here. I mean, finding that long structured setup. Same thing, if we come and take this low and I see 50 million volume and 26 million delta, and then price wicks and reclaims this level, I'm way more interested in that long and way more interested in holding it than I am if there's no volume, no delta, right? Because I know that tons of liquidity has been grabbed. And if we look at major highs and lows, you're often gonna see high volume and these high delta candles. And when you look at medium time frames of lows, you're gonna see higher relative volume and higher relative delta. And when you look at low time frame highs and lows, like this wick here, you're gonna see some of this higher volume and higher delta regions, although more of this was in this candle, but it is the same region of this chart. You can see the volume delta here, the market selling. And you'll see that it's trading the opposite. So the point of this whole thing is, this is relatively high delta here selling, which means I'm not as interested in selling or shorting into this for an order flow reason as well, because I see there's quite a bit of relatively high selling coming in here. So other people are maybe trading that trend line breakdown. It doesn't mean price won't break down, but if price isn't moving and I'm seeing 7 million plus delta in selling between these two 5-minute candles around this level, I know there's a big trader or big traders sitting here holding with an interest in holding price up, right? Because price would break down if they weren't. So they limit bought this. And so although price may break down, why do I want to trade against these guys that just absorbed 7 million in selling by trying to trade that little breakdown idea I just described? I don't really want to. So this doesn't mean that price can't just nuke here, because in fact, we have seen such a thing happen where a big trader counter traded a bunch of market selling, absorbed 20, 30, 40 million dollars in selling, but you can only absorb as much selling as you can absorb, and then got nuked, right? The selling pressure was too much, and then they had to unload their position. And so you see price break down, you see presumably, a lot of that position they were just building long come down. So that happens too, but it's just something to be aware of. So anyways, hopefully that makes sense. I'm seeing signs that there's a big trader here and signs that there's market selling into this level, whether it's longs closing or shorts opening, probably based off of some thesis like this, right? I mean, who doesn't love trading a breakdown of a trend line and a retest? And I'm not surprised traders are looking at this, and I'm not surprised to see a little bit more volume and selling coming in here, and I'm happy to sidestep this one. Kind of a complicated idea, just telling you my thought process, but I'm happy just to miss the trade if there's in fact one to be had here. And if I was to be a little bit more accurate, might have traded this retest and had some more flexibility here with my position, which would be to be taking a profit off of it and maybe removing the risk off the scalp. But I'm not in that position, and I'm not going to pretend I can get into that position by turning back time. So I'll just hopefully trade the next idea a little bit more precisely and end up in a good position. Yeah, we are going to pull over to Sol here. All right. We're going to watch Sol for a second because we're coming up to a key level. So let's just watch this. First, I'm going to update the Discord that Sol is coming up to a key level, and maybe encourage everybody that isn't here, that can be, that I'm still live. All right, so the basic premise of this trade, excuse me as I have to pay attention here. It's coming up and taking this liquidity. I'm going to remove some of these
levels, just for clarity. We've swept the liquidity. I would trade outside of this descending structure idea some protection with my invalidation. Willing to take the trade somewhat aggressively on a break of that level. I can always close it. Or sorry, not on a break of the level, on failure to break the level rather. See a nice little increase in volume up at the high here. Now this would be a concept. We've all seen price wick and have a quick rejection, wick have a reaction, and then an impulse. So you have a couple options here. One would be that, well, your invalidation, it's the same concept, shouldn't be, in my view, on this high time frame trade like this. I mean, if you got away with trading it like that, and you 5R, or sorry, you 30R it back into these local lows, or 100R back into the range lows, well, props to you if you get away with trading that. But it's reasonable to have a little bit wider of a stop. Start looking at some wider structures here on some of these, and looking for this reaction, retest. You can be patient here. You don't need to enter the exact top of the wick. Can enter it as a bit of a region. The target for this trade, if I get a trigger here, is going to be, for me, way down here. Okay, so it's about an 18R trade, traded with a stop outside of this parallel, or sorry, this descending channel, 17, 18R. The main idea is grabbing the liquidity above this wick and breaking down, but we'll see. There's no point in me shorting if there's no signs of weakness. I don't need to short the initial. I'm not surprised to see some reaction there, because I mean, people are going to be watching that level. We haven't quite tapped the parallel structure yet, so we'll see. I either get a trigger or I don't. This is a higher time frame idea, so afterwards, after I take this trade, I do not need to be looking at the 1 minute chart and watching this level for the next 4 hours, right? Because it's not a trade based on the 1 minute chart, and it's not a trigger based on the 1 minute chart. But we are going to look at this level just for clarity's sake. I'm going to mark it out. Trade trigger. And we're going to make sure it's pulled accurately. Now we're just going to wait. We're going to set an alert at this level. We're going to set an alert up near the channel. There are potentially possibilities. By the way, look at Bitcoin squeezing out these losers. No, I'm just joking, but hopefully that makes sense. Wasn't shorting this, all the reasons why. I gave the reason why. Sometimes I do trade trend lines. This is not a case, and blah 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 blah. All right, but anyways, and here's the thing. Like I have a ton of educational content. Hold on, I'm going to be looking at taking this short. I have everything put in. I don't know if price is going to continue, but you have to make a decision at some point if you're going to take the trade or not. So we have a sweep of the liquidity, price is reacting, it's retesting this level, and for me, I don't mind taking the trade off a reaction. I have my invalidation up here, and I don't actually mind cutting my trade if we start reclaiming the level, but I'm going to initiate my short here. So I've taken the short, and the reason is because
there's two things that can happen here. Price can chop around this level. Price can come up. Another possibility is coming and retesting the level. That's another possible entry. Or price can just run the liquidity and have a quick reaction, never come back and retest it. I know the kind of reason I want to get into a trade here and the kind of all the different kind of concepts. So I'd rather trade the initial reaction, and I'm happy to just take the stop loss if it doesn't work, or I'm happy to come back here, you know, if let's just say over the next hour or so, price is coming up here, it's reclaiming the level, and we're coming to the New York Open. You know what? Maybe I take the partial stop loss and I re-enter, but I'm perfectly happy to put on the risk here. I put on the long at the lows on Sol, and I'm happy to try this short. It either works or it doesn't. But too much hesitation on these kind of wicky moves just kind of changes the makeup of the setup quite a bit. So what I would say is this: if you there's kind of two people that are trying to solve two different problems with this type of trade trigger, which is the type of person that takes it too early with invalidation too tight. So they find themselves taking the trade when there isn't really a trigger, like they maybe take it up here and there's a bit of a reaction, they enter before the level is lost, and then they get stopped out, or they enter here and then price wicks them out again, and they feel like that's their common problem. The other type of person is they can't get into the trade at all. So like price loses the level, maybe they're afraid of this happening, and so they enter, or so they don't enter, and maybe this happens, and then they get a retest, but this kind of happens, they don't enter, and no matter what happens, they can't find a way to get into the trade. Where I'm sort of the opposite. I'll just take the trade if the level's lost. If I feel like I have a reasonable reason to close the trade, even before my invalidation is hit, I'll close it. If I get stopped out, I'll get stopped out. I'm not trying to avoid ever taking a loss, just trying to take reasonable trades. And so what I would way rather do in almost all circumstances, just not trying to make the perfect decision, make a reasonable decision, and understand I'm taking on risk, and just being comfortable with the risk that I'm taking versus the potential reward that I would be getting. But I hope this idea is clear here, which is the parallel structure is sort of a loose idea. I kind of noticed like, hey, there's sort of a, well, and it was actually not drawn very well, but sort of maybe a loose parallel structure here. We have the 786. It's a very important retracement level for alts in my view. It's aligned with a nice little impulse high here. So, you know, there's an idea of just grabbing that liquidity, sweeping it, and just using this as a trade trigger. Probably looking to TP into some of these local structures here. Just let the rest run. It's a high probability place to get a reaction as well. And here's an option for people. I'm not saying that you have to do this. I'd say it's less relevant on a higher time frame setup, but it's perfectly reasonable. So let's just say this is your setup, okay? You've taken a trade, and your setup looks something like this, and you see the wick back through the level, and sometimes price, wicks through a level and then just has strong continuation, never comes and retests it. Sometimes it wicks and reclaims the level. So people will say like, oh, I took the trade here on this wick, and because we lost the level, let's say,
But that always happens to me, and then it reclaims the level, and I took it right at the wick through the level, and then I get stopped out. Well, just close the trade then, right? Like, I guarantee you, if your concern here is getting stopped out and taking the trade too early, just close it. Yeah, but my stop loss wasn't hit. And they might immediately think, this is what they'll say, they might immediately think, God, I shouldn't have taken this short. I took it right here, and now I'm in it. They're at break even. They might even be in like a slight profit. We're talking, pennies if they're risking $1, if even that. And they'll sit here stressed to hell about having taken the trade in their mind too early, the level's reclaimed, and its price isn't breaking down. And it's like, if you don't feel comfortable in your trade and you think the trigger wasn't valid, or you took it because you were worried, let's call it, worried there was going to be a quick rejection and you'd miss the trade, well, there hasn't been now. So just close the trade if you want to. There's nothing wrong with that. But then you say, well, what if I close it and then price does that? Okay, well then if you want, reopen it at essentially break even. Well, what if I close it and I don't get a chance to reopen it? It's like, well, then leave it open and accept the risk in the trade. Like, just make a decision and make a reasonable one. But there's nothing wrong with saying, yeah, we had a quick wick. I don't want to miss this trade if we have a quick rejection. If there's consolidation and prices running here, you're sized up here, you're at break even. It's essentially free to open or close this position. If you decide that you don't want to be in it and there isn't a quick wick rejection, you can just close it. But don't, what doesn't make sense, and I don't know why this is the case for people, is they'll sit there really stressed about taking that trade as price chops around. You're trading a 4-hour level. You see a quick wick, taking the trade. Price is basically in a 0.5% range. And they'll sit here super stressed about being in this trade, and they took it too early. They took it. What that usually tells me is that somebody's not accepting the risk in the trade. Maybe they're trading it too big, right? Maybe if they get stopped out, they're not just risking 1% of their account. They're risking 20, 30, 40. Not always, but sometimes that's the case. So if you can't accept the risk in your trade, it could be a sign of a lot of things. But ultimately, if you're not comfortable in a trade for whatever reason, just close it and find a trade you are comfortable in. So anyways, hope that makes sense. Trading doesn't have to be like, obviously I have educational content on a lot of these concepts that is more, I guess it's focusing on each individual concept that I'm sort of putting a lot of these together in this live stream. And there's no way for me to teach all that stuff in a live stream. There's no way for me to teach it all in a Twitter post, and there's no way for me to teach it all in a Discord update. It takes time to learn all this stuff. And that's just the reality of it. If you're not willing to put the time in, then how are you going to learn all of these things and be comfortable deploying them? And you don't need to know everything to utilize these concepts. You can know some of the concepts. You can utilize some of the concepts. Yeah. So yeah, just all that to say that I hope this isn't too overwhelming for people. I think it's kind of maybe fun to do this every once in a while, and we have some unique kind of price action here, obviously, in that it's okay to not assume that you should or could understand everything or implement everything on day one. Take some time, learn it, develop the skills over time, develop the confidence and even your own style, right, over time. Yeah, I would be a little bit wary of being in a short right now.
We'll see what happens. But anything can happen. Does that make sense to you guys though? Everything I just said about Sol? Like, whether your problem is getting into the trade or that you take too many trades too early, or you can't find yourself pulling the trigger on a trade, you can just get out of a trade if it's not going in your favor and you don't like what you see and you're not comfortable. And if the reason you took it does no longer exists, just close it. If you're fine with the risk in your trade, then just leave it. But anyways, let's kind of yeah. I mean, I don't know. Hopefully I'm making things clear. The thing about trading is it doesn't have to be complicated. Like, you can make a series of simple decisions. The complicated part is just making a decision, right? Like, and keeping them all reasonable. But yeah, this is not too surprising. There's no right or wrong answer here. There's no right or wrong answer taking a stop versus having closed on some signs of strength at a partial stop. But let's run this out. Although I will say this, there is some long positions opening. So I might be interested in shorting Bitcoin, but nothing super compelling here at all to me yet. But we can just notice here where I was pointing out this heavy selling coming in at the lows. There was signs of absorption. People probably shorting some version of that trend line. We see evidence that some of these positions are getting stopped out now, right? 4.5 million positive delta, 3.2 million, 1.9 million. A little bit more volume in these candles. But nothing really compelling to short, and would be expecting a bigger impulse on these levels. But there might be a short setup here. I'd be probably a little bit more prone to not short this impulse and wait for some structure like this and short maybe a second touch or a big bearish divergence. This just probably is going to get a little nasty. Now, of course, I mean, by nasty I just mean volatile, choppy, volatile. Who really knows? We do have a level right above us that's worth watching. But yeah. Oh, I am not on the right chart. Sorry. Expecting a little bit of volatility here. And we will... Man, I really wanted to take a little bit of time before the New York Open, but we'll see. But anyways, this is kind of critical. We'll stay and watch it. I'm going to move these alerts on Sol. I'm not really interested until price comes back below this level. And then the other level of interest, if this is cleared, it's just this high. But yeah, there's a couple of charts to bounce between here. Would I take a trade based on technicals? Somebody's asking, even if order flow is not showing weakness. Oh yeah, I mean, I've taken trades on like 5% wick straight up in 1 minute, and there's just huge volume, and the reaction's instant because like there's really good risk reward to shorting that liquidity grab of a big level. Like for example, I'll just go to the 4 hour chart, but this just happened very quickly. We gotta get back to the live chart really quickly, but I shorted this wick, right? I mean, there's no weakness in order flow. Price was within a minute or two. Price was down 10%. But I had the idea of shorting price running these highs, lots of liquidity, lower high, lower high, lower high, lower high, breakdown, ran those highs. As soon as I saw the reaction, I took the short. I had a stop loss. I had invalidation. So yeah, I mean, I take trades for many reasons, and one of those reasons is a big liquidity grab and a big reaction. Could be bearish absorption or divergences forming. But and it can be technicals and a mix of all of them. But there's different kind of environments, right? Like for example, here's a good example. I think, I don't know. It's hard to say. We're gonna jump between a few charts here. No rush. This to me seemed to be a relevant trend line break on Matic on this time frame, as did this one, right? So I think if you go back to my Matic updates at the time, it said, I'm breaking this downtrend, and there's ideas. I think it was Matic. I showed ideas of like if you're not in a long from the lows, like this is kind of relevant, right? These highs are kind of relevant. But anyways, you could structure setups on breakouts like this, and I think it's important if you alts have the similar structures. But then somebody might say, well, then why wouldn't you short this 1 minute, trend line if the market is in fact, fractal? And I guess the answer is there's just a different context. Saying like I explained, I don't like shorting all of these little trend line breaks, and I know people do, and they put their stops right above the highs. It's just a recipe to get stopped out over and over again. And so that being said, sometimes I long breakouts, and sometimes I short breakouts, and sometimes those trades where they're trades. What was I answering again? Oh yeah, if I ever take a trade just based off of technicals, and if there isn't order flow showing weakness, yeah. I mean, sometimes the trade's an instant reaction, and I often short altcoins. I'm not even looking at order flow. I'm only looking at technicals. But anyways, as for Sol here, I simply want to point out that there's people who are finding themselves in a position where they like I said, they're really stressed out by this situation, and if you are, just close the trade and then reopen it if price breaks back down below the level, right? You have to take some responsibility for managing your positions and making reasonable decisions. And if your idea is price running this liquidity and sweeping it and breaking down below this level, and you want to put on a trade because that's happened, and then that's no longer happening, nothing wrong with closing it. But here's the other thing. There's also people who will say, well, just let your idea play out. You either take a stop loss or it works. I'm also one of those people that is perfectly fine as well. There's no right or wrong way to manage a position. If you want to, there's no one right way. There are definitely wrong ways. There's no one correct way. Do whatever makes you feel comfortable, do whatever, as long as it's reasonable. But like for example, there's going to be people who would say, and they may be right in this instance, that the best way to trade this is, well, you should be short on the retest, and your stop loss should be double the distance of the liquidity grab. And this is a double top, and until a price reaches this distance, and you should always trade a range as a 2R setup, and all you do is put your stop loss at 2R, the distance to the target, something like that. And that might be how they like to trade. And they would just sit in this short until this stop loss is hit or this target is hit. And that might be their system, and that might be how they trade. Well, I might trade completely differently based on similar concepts. But for example, there's people who trade like these range liquidity grab setups in the Discord, and the way that they'll trade them is they'll just put a limit order at some fixed distance below the level. So like if they're trading this, for example, or they're interested in trading this, rather than put their wait for like a reclaim or anything like that, they'll just put in their system, they'll miss some trades, they'll get some, they'll put a limit order, some fixed distance below the level, accounting for liquidity to be grabbed. They'll put a stop loss either under structure or some fixed distance, but typically under structure. And then they'll have a target like this. And so instead of them trading the setup as a market order, maybe on a reclaim, this is just an example, with a stop below the wick, they're trading it as a limit order that triggers without them being at the chart, accounting for the liquidity grab. And the concept of setting up both of these trades is very similar, which is looking for these lows to be taken, price to run the liquidity, and then run back up to the highs. But one person's trading it completely different than the other, and there's no right or wrong way, and not everyone's a full-time trader, and people like using limit orders for that reason. So, and they get some pretty sick, insane entries for that reason. Well, this shouldn't come as a surprise. Somebody's asking, what's order flow saying, Lucky? Absorption or trap, question mark? I don't think there's anything very definitive here. I mean, if we reject here, it kind of has local range vibes, not really major high vibes to me as of yet, but I don't really know. The only reason is because, I mean, again, yes, we just have equal highs forming, right? As we're about 40 minutes from the New York Open, and we have local selling being absorbed, and now we do have signs of local buying pressure being absorbed, right? So people probably anticipating some volatility, even I was. But as we see this rejection, we see some of this. This isn't like major high conviction, like this was a liquidity grab, this is a trap, they're going to get wrecked. But I am seeing the potential for what my best interpretation would be this. Many things, I don't have a high conviction interpretation of this, but it would be that we're coming back up to the highs of the range. People were shorting or selling into this a little bit, this first pullback, and now shorts are closing, longs are opening, and people are probably going to get chopped up here. And so I wouldn't be surprised if this is a minor high that we're putting in, essentially. I would say it's a valid short setup, maybe a little bit of a low conviction short setup, if I was to call it anything like that. And
valid in this sense, but I kind of see this as like, if I had to describe it, like choppy price action, and I'd rather wait for something maybe a little more compelling, which would be more volume, more delta, whether that's lower or higher. So I'd, maybe it's like this, right? We kind of just chop around, but because in the same way that you could get, for example, chopped up shorting like this over and over again, expecting a breakdown. Sorry, like the trend line example I gave, for example, where you just keep repulling trend line, shorting the breakdown, stopped out, shorting the breakdown, stop out. You get chopped up the same way longing potential breakouts, right? So people do the same thing. They either close shorts or they open longs, and they trade this as a breakout. And so this is the dynamic that's happening here on the charts. People selling into or shorting breakdowns, stopping out longs, opening breakouts. So they trade these wicks as a breakout, tight invalidation. They trade these as a breakout, tight invalidation. And again, this is why we get ranges on all time frames. And we see the same signs, right? People are longing this as a breakout and stopping out shorts. And what happens? This. As people continue to sell off longs and short, flip long, close shorts, and we get a choppy range. And so I would say as a scalp, I'd say it's a mid to low conviction scalp short if I had to take a choice at this point, simply because the volume isn't very high, but there's certainly signs of absorption, right? See 4.5 million. So just imagine, you've maybe sold into this local low, seeing some form of weakness, get a little bullish divergence here, nothing major. Price rallies back up to the high. So you either close your shorts or you start opening longs into here, and now price starts kind of grinding back down. Maybe this has happened to you a couple times in this range, trading tight breakouts. Maybe you start widening up that stop or invalidation a little bit, using these lows to protect you. And then all that liquidity gets wiped. So that would be an idea I'm more interested in. I don't really want to get chopped up at the highs of the range here. If I saw something super compelling, like a big high volume, high delta idea. Sorry, I was drawing this. You move your stop down here, and then price comes and runs all these stops. But anyways, it's just nothing really compelling happening here in my view, or at least decisive. So I'm not going to trade it. And I think, kind of cutting my range high short ideas with this sort of development here, I think was probably the right call, because now we've just been chopping around here ever since then and waiting for something a little bit more compelling. And that's, of course, an issue with am I nuts? I thought I moved this down and this one up. Oh, maybe I didn't do what I thought I did. But there's no structure here on Sol. That's particularly clear if we go to the, let's call it the 4-hour chart or the 1-day chart. So until price gets accepted back under here, it doesn't really make sense for me to be short here, right? We can have those quick kind of wick reactions from a level. Or not.
So let's take another look at Bitcoin here. 5.7 million delta. Again, just local highs holding. But because of this delta, if we start rejecting here, more longs start coming in. This will be a technical bearish divergence, but it's not really, in my view, reasonable to try to trade it as one yet because, price is breaking and claiming these levels. Candles aren't even closing. Yes, lots of volumes coming here with more shorts closing, but let's just see, how this all plays out. But if price starts closing back below, more logs start coming in, and this bearish divergence becomes more relevant. But yeah, not everything you notice has to become a trade, right? It's worth noting. We sort of have a little so this is, if I had to guess what's the most likely outcome of all of this, and maybe what I'd be interested in trading towards at this point. We started off earlier on in the stream at the very beginning, marking out these levels and, the long trigger, short trigger, short trigger. I would assume we are more likely than not as we approach the New York Open, which is also a key trading period. At this point that we take the liquidity above these equal highs, we may not, of course. Something like this, and then we start running into some of this liquidity. Maybe even a little shallower on this. And then we form a little bit of a range maybe, which is always more likely than not. Something like that. Come take some lows, and we range here with either a lowish high with bearish divergences, a sweep at the high for a liquidity grab before a bit of a reversal, or consolidation with bullish divergences and a breakout, but we don't have any of that information yet. But some kind of range with some sort of indication of what is to come next. It's probably going to be a mini hour day range, but we'll see. Kind of interested. Kind of interested to see what happens here. But this is probably a short opportunity coming to the New York Open with a nice clean trigger, and there might be a long opportunity. And then after that, I'm just going to wait for higher time frame structures to form. We can watch. Can also have multiple scenarios, which is this last candle had 5.2 million delta in it. So let's just look, 5.2 million delta right at the high. So now, this, just imagine this trader, let's take a second. Decrease in open interest, sells off $5.2 million, or closes $5.2 million in shorts right at the top of the range. This is a technical bearish divergence because, well, there's an absorption. And now that we have a rejection, it does become reasonable to look at shorting this. Because we have, I would call it a confirmed bearish divergence with a candle close. Could wait to see if this trend line breaks, kind of half a dozen, 6 of the other. Wait to see if this reclaims. Sort of a confined section of the chart here. But imagine being this trader where you've closed your short. Such a nasty feeling. You see all the volume here. You close this short, anticipating a breakout. Somebody loads a short with you closing your short because that's how the volume is transferred there. And then price goes immediately down. You close your short right at the top of this wick. You see it all right here, and you see signs of absorption. Right at the top of the wick, you've closed your short, and price instantly drops straight down. Yeah, I keep forgetting to switch screens, but yeah, you've closed your short here essentially, expecting that breakout. I was anticipating a breakout, but I'm very glad I was not closing a $6 million short at the peak of this wick, because that would be a unfortunate feeling. I was just watching. Again, it's a bit of a section. Not a big difference between shorting anywhere here in the context of a major high, but nothing wrong with just waiting to see how any of this plays out, right? This is what I was pointing out. Do we hold this trend line? Do we flip it? A price chop around here. New York opens in 25 minutes. Some signs of absorption up at the top of the range. The candle has closed now, with us establishing that there are indeed traders up here limit selling. Shouldn't be a surprise. Just look at any chart really, but that there's limit sellers up here. Price reacting to that idea. Now, what would be the high time frame ideas before I end this live stream? Well, high time frame ideas would be waiting for some structure to form, right? So we have a major high here. Do not need to short the wick through it if that's not your style, if you don't like managing trades on that time frame. Wait for some structure to form. A bearish idea is lower highs start forming with bearish absorption, lots of longs getting absorbed, and it could make sense to put on some higher time frame swing short risk. And the bullish ideas are range forms start consolidating. I mean, the really bullish idea is just price keeps going straight up, obviously. I mean, that can always happen, just like anything else. But price consolidating with bullish absorption, prices making higher highs, higher lows, all sellings getting absorbed. It's very similar to what was happening here. And price just keeps grinding up higher and higher and higher and continuing to impulse. Would I be shocked to see a range here? No. Do we have some bearish absorption that has formed as we come into the New York Open? Yes. At the top of the range, there is bearish absorption in order flow. There's actually a very, I'd say, clear case for a short setup here, which is, it can be traded a little wider, it can be traded a little tighter. Probably prefer at this point to trade a little wider. But price is breaking down. CVD has made a higher high with 5.2 million market buying absorbed at the highs. Kind of equal highs here. I do hate shorting equal highs or longing equal lows because it's just such a nice target for liquidity. But again, the thesis of a trade here is pretty straightforward. And you can dictate how much risk you're willing to put on. And that should be a number you're very comfortable with. We have essentially a triangle on the 1 minute chart. It's going to break probably one way or the other, but maybe this, maybe this. maybe this. Wrong screen. Sorry. Oof. I should probably wait 20 minutes till the New York Open. This has gotten extremely boring in terms of price action here. How long have we been in like a 0.5% range? So boring, in fact. I might need to wrap it up. Let me do this, okay? I'm going to establish where we're at. I do need to take a leak, so I'm going to be right back, and we'll reevaluate where we're at after that. Prices ranging after a big impulse, a big breakout. There's nothing, and this has been the case, I think, for 2 kind of trading sessions in a row. There's no point in looking. There's no high time frame levels here. We have this level up here. We'll call this high time frame levels. Price is at the highest point it's been in a long time. The only relevant data we have here is local structures, in my view. Local structures, local order flow. If you're going to trade anything at all here or watch anything at all, this is really all there is to look at. So price is impulse. We have a range forming. We have some limit selling coming in at the highs. This is evident both in price reacting to these levels. I mean, clearly something's holding price down. It's forming a set of equal highs. We have a little bit of a trend line building up here, some local levels. There are kind of a low conviction trade setups here, short, because of the bearish divergences, but a little less compelling because of the equal highs, right? Equal highs, and New York opens in 19 minutes. Be nice to maybe run that liquidity, and low conviction scalps. And then we have a major pivot high up here, so that's something to consider. But we have a range idea, and we have some local levels following, building below us. There was a long setup down here that made sense. There was a bit of a short setup here that made sense. But since this kind of section of the chart and this breakout, this level was established, we've just basically been consolidating the inverse of this, right? Doesn't been anything that I've found particularly compelling happening on Bitcoin locally since this started forming. It's a very similar, just point that out, that this is just kind of a similar inverse sort of idea here. So like this would be this long, but reverse, right? Grinding down, have the impulse through the level, break
this trend line, this direction, flip it, and just form a range. And typically what I'd be doing if this was not a live stream where I felt the need to just ramble on for hours and have something to talk about, is I'd be marking out key ideas and then setting alerts and not necessarily looking to watch every single 1 minute bar for 4 hours straight. Or looking to trade around key levels. If you're scalping, that dynamic changes a little bit, but nothing wrong with trading like the 5 minute chart, setting alerts around key structures like this, and then just reassessing as alerts are hit. But I'll be right back. I do need to take a leak. Oh, more bearish absorption back, by the way. Nothing major, but again, just between these two candles, we're seeing market buying. And bearish absorption does not mean price has to go down. I explained this at the beginning of today's stream and yesterday's. It's just telling you there's limit sellers absorbing market buying. You can see it clearly in this blue line making higher highs and price just reacting and having trouble carrying on here. So let's just talk about a couple things you could do as a technical, if you wanted a technical trigger. Well, you just look at trading this as a range and you say, well, we've had the liquidity, the swing failure. I have my invalidation, which is a breakout, right? You could trade it like this. Seems like a pretty reasonable trade to me. Could wait for a breakdown. Seems pretty reasonable. You have the possibility of holding this into the lows as well. If there's a bigger move, you have a retest of this level. These are all reasonable TP targets. Whether it's a limit order or if you're live trading, you might wait to see how price reacts. There's a possibility it just breaks. You hold it deeper. Oh, I am on the wrong screen. All right, damn it. All right. First example was on the retest. You just look at it as a range, and you say, here's the sweep of the liquidity. We have bearish divergences. What more do I need? I'm going to put on the short. My invalidation is above the highs. This is the setup. That's the first idea I gave. The next would be, well, I'm going to wait for a little more weakness. I'm going to wait for this triangle uptrend to break. Now, the difference here is we have bearish divergences forming. We've had some fake outs, some ranges develop. At some point, you got to put on the risk, right? So you just take the short and you say, okay, I'm short. My validation's up here. Could short into this wick, into here. This is a 2-hour trade. This is all reasonable. I guess I had a limit order here to take the other side of this trade. Now, I have to maybe think about how price reacts and order flow reacts to these lows getting taken. Be interesting to see how much liquidity there is under there. Don't have to worry about that quite yet. But the point is, there's no certainty. I have zero idea what's going to happen. There is a reasonable reason to put on a short here because, and you have lots of ways to structure this trade. I'll just keep forming new examples, but this should be kind of clear. Like, even though I shorted here, I closed in, I stopped shorting around here, new information developed, and in the end, I can kind of just get a short from the top of the range anyways. That may or may not work, but I didn't really lose out on anything by just waiting for more information. But anyways, this idea, something, I would share in the Discord all the time, which is a sweep of the liquidity, a retest, with the added benefit of a little bit of bearish absorption as your confluence here. Again, breakdown. Now, what's the downside of this setup? You have equal highs here. Your stop loss is the target for just like a liquidity grab, in which case you could re-enter if you would like to. Or, here's an idea, you take on a partial risk on your position. And so if you take a stop, your combined risk is 1R. If you take 2 stops, so you take a half R on this and a half R on a sweep, and you say, well, there's 2 trades I'd trade here. One is if we can sweep this liquidity. And this is why I'm giving ideas here, okay? Because I'll explain a couple things. Whether you take this trade, you take this trade, or you can't take the trade, but you want to take the trade, but you also don't want to take the stop and then have to trade this setup again because that's the trade you're most interested in. But what if that gets stopped? Then you took 2 losses. You have options. I mean, take on a little bit of risk on the first idea if you like it, and take on a little bit of risk on the second idea. If you're worried about taking 2 stops, you get to do whatever you want. You can manage your risk however you want, and you don't have to trade the retest. You could trade the breakdown. We'll look at even some other ideas, but ultimately there's the possibility of course, if we start breaking down this structure, not the most likely thing, just possibility of once we get into this region of the chart, there's no structure. So the price could move very quickly back through this region of the chart, and this could turn into an 11-hour trade. And then all this work we've done for the last 4 hours, and by work, I guess it's for you guys hanging out, I've been working pretty hard, I think. And the kind of work you'd put in on a session like this could all be worth it. You go the extra mile in like a scalping. Again, this is particularly scalping sessions to manage your risk, to analyze the market, to put on positions, to cut positions, so that maybe a session it's not some home run session where you make 20R on a single trade. Maybe you grab an R here, you get 2 or 3 here, you lose 1 here, and it's nothing to write home about, although that's a better session than many will have. But occasionally you'll get yourself into great positions, and those are kind of the kind of positions that make a trader's week, month, or year, right? Especially when you start stacking them up. But hopefully this makes sense. That's the main thing.
you guys learned something, and it's something that you could actually take with you in the future and apply to your trading, the concepts, something you can look for in the future. How we have what I would call developing context in all of this ranging. There's no certainties. Things become more or less likely depending on different things that happen. We're getting more and more information as more and more data comes in on the chart. We can make a decision and, believe it or not, change our minds. Right? We can say, I'm in this trade for this reason, and I'm out of this trade for this other reason that didn't exist when I took the trade. And it can be something as simple as, I don't, like let's say an order flow example. I don't like the short here, and then $20 million of longs open up and get absorbed. And then, or we run the liquidity, and that's a nice setup I like, whatever it is. And then the context changes, right? All right, I'm going to stay on this live stream for about maybe 10 more minutes, but the New York opens in 5 minutes. So this is something that you want to consider. It hasn't been as good recently, but we can't, the long-term data suggests that the New York opens it's a really key level, key time to put in key levels and pivots. So like major highs, major lows like to come in around that first half hour of the New York Open. And so looking for, consolidating like this right into the New York Open certainly makes you need to be like wary of these impulse ideas for potential trade setups. But yeah, we'll see. We'll see how the next 5 minutes goes. Currently, bearish divergences, a little bit of a range forming. We'll see if these limit sellers are rewarded for that activity or punished. But see, what would be really nice, and what I might have done not without a live stream, is, and the only reason I did this live stream is because we're breaking out into like new price territory. It's potentially a unique situation to navigate, because in theory, and maybe it is, I mean, it's hard to say. Sometimes some price actions really is just easier to navigate and trade than others. But in theory, what's happening here, not many people, it's not necessarily something you experience every day, right? So it's kind of a unique opportunity to navigate live price action rather than your typical day. I mean, it's a pretty major liquidity test and breakout. Volume's going to be a lot higher today than it typically is in this breakout. So, but usually what I would do is I would let some of this price action form, and I would be coming to the charts around the New York Open, because this is like this is a time I like to start a trading session, and not necessarily be at the charts 4 hours before the New York Open, unless a major idea is in play, and then I might execute a trade I have planned. But yeah, this is not going to be a typical day for me in terms of the hours I'm on the chart. Yeah, so I would just say, in terms of relevant structures, even on this low time frame, a little bit of a triangle here. I mean, these are relevant too, because people are going to be watching them, and they're going to be using them as trade triggers and invalidation, right? So if you're short here, your stop's up here. This is a target. It's one of the problems with shorting equal highs before a liquidity grab, because price loves to grab the liquidity before a reversal. And people are going to also be watching this ascending structure trend line for invalidation. So typically this becomes a location for local long stops under that, these levels. So our two kind of local liquidity levels are here and here, right? But we have a little bit of context to go along with that knowledge or the structure, which is we have bearish divergences forming here, which in my view start to make the idea of a move to the downside, at least until we've run some of this liquidity, more probable than a move to the upside, because we've tested the upside several times, and it doesn't mean it's impossible. I mean, these same traders could just pull these orders, but we've tested it several times, and we have signs that there are traders here limit selling into this. Between these highs, we have those signs because of the CVD. Between these little local highs, we have those signs. Even in this last candle, we have some signs that, and again, it's not to say that we can't run that liquidity. It's just to say that we have signs there are decently sized traders limit selling into this, and market longers are having a little bit of trouble breaking through this selling. So it's just a, it doesn't say anything about what's going to happen. It's just saying what is happening here. And these traders are maybe big enough to hold down some decent size, 4.5, 5.2 million. But I know this kind of sounds like too many caveats, but these same traders might be interested in letting this liquidity get run, right? Because there could be a lot of liquidity piling up here. So they're averaging into a position over time. I'm not saying this is what's happening. I'm just saying there's reasons for everything. And then they pull their limit sells. The market runs up, maybe on a bit lower volume, tapping a ton of volume here with a bunch of shorts getting stopped out, longs getting run. They finish filling their positions. They've averaged into a position here over time, because institutions, big traders, they don't market order into a position. They don't fill it in 1 second. They have to fill their positions over time. And so they could have an interest in doing that. New York Open is now 1 minute ago. So seeing some volatility. It's a nice time to look for volatility, pivot highs, pivot lows. You'd be surprised how much volatility initiates at the New York Open. $8.2 million delta at the top of that, or in this candle, 4.5 million. I know, again, I don't have any problem with this. I was completely wrong about saying the downside was more likely, but I mean, I don't care. There's no way for me to know that, right? There's an explanation for both, but we'll just see what happens here. See this big spike in volume. So now this becomes very relevant, right? The New York Open, we're putting in a high. I don't know if it's going to be a major high. About to test this level here. Anticipating until there's signs that we're back in a range, some volatility here, potentially a big move. Never in my life would I short this. I mean, there's nothing here. There's no reason to short. There's no weakness. Price is breaking out. Don't be short. So I'm just going to show you something really quickly. We're going to jump between both charts. 16.7 million delta, 29 million. This is much more important and significant. Volume is more significant. Delta is more significant. This is where I'm not saying a major high is in. I'm not saying it's going to come in. This is where I would start looking at this being a major high. Looking at this reaction is much more significant. and taking this short. I mean, I'm taking this short. This would probably be typically the first trade I take of the day at the New York Open. I'm going to take that short on this high volume, high delta. This short, I'm trading into the lows of the range. I'm going to explain a few things. Oh, God damn it. Now, we have a major high up here above us. That's okay. I can manage this trade locally. This is a wick that I'm expecting is more likely to have a quick reaction. God damn it. It doesn't matter. I'm not even going to bother. I always forget to. So usually part of my routine when I'm preparing for my setups is I share the ideas I'm most interested in the Discord. Then I update when the ideas are near, and then I update when I take them. I haven't updated any of this in the Discord. I completely forget when I'm on a live stream. So this trade's not over yet, right? I haven't run to target. I'm showing what I'm taking. My invalidation's the wick. I'm going to see how price treats this liquidity. We can just keep grinding up here. There's nothing, I have no confidence that this trade is going to work yet. We have a reaction. There's an idea. There's a lot that needs to happen here between this trade working and not working. But anyways, I digress. This is not, again, no point in trying to learn all this stuff and copy trade me on a live account. Very dangerous, not advised. You're going to get wrecked. So we're retesting the level. We're just going to see how this plays out. We have a ton of, we have a lot of shorts stopped out on this wick. High volume, high delta. A little bit of structure here. It's all kind of relative structure. Right, the New York Open. This is worth a short for me, for sure. In the same way, based on volume, based on delta, the same way that this was worth a long. I have no problem taking this. Do I love that this wick was front run? Not really, but I can also close this trade. I'm gonna explain this really quickly. I can close this trade and get out at a partial loss because we're reclaiming this level and I'm essentially at break even, right? I'm shorting this reaction. I can always reopen it. Now I can just close it. Doesn't matter. I mean, price is up like 0.3% from sweeping this wick. Or sorry, 0.03%, it's 0.05%, and I can just gauge. I'm not suggesting this is how you take trades all the time, but if you're trading low time frame liquidity grabs, with high volume environments, you can get out of the trade if price doesn't start moving in your favor and stay in your favor. And what can happen, and this is why I'm sharing this concept, is because people get really caught up in opening and closing a position. Like it feels emotional, right? To make the decision to, I'm going to get into this trade or I'm going to get out of this trade, and opening and closing that position for whatever the reason is. And so because of that, they have a hard time getting into the trade if there's a sharp wick and reaction, if that was their plan, because they're afraid that they're going to take a stop. But if this happens, hold the trade. If it doesn't happen, just close it. You can always reopen it. And I think people feel so much stress when they're opening or closing a position that they want to put off dealing with that stress. So they just can't close it. So anyways, what can happen is when you make a quick decision, I'm not saying that this is how you have to trade. Price is coming up to another major high. This has to be. When you're willing to make those quick decisions, you can just get out of a trade at break even, 1R loss, 2R loss, which 1R represents 1% for me. But 0.1R, 0.2R instead of 1R, just closing the trade when there's not a quick reaction in your favor, and you can always reopen. And it just gives you flexibility to say, I'm going to short this next level. And if I take 3 of these partial losses in a row, it's essentially I've lost 1 trade. I'm not going to take the full stop. And what I will say is it's perfectly okay to take a full stop and trade this wider. I'm demonstrating for you guys how I would scalp these entries. If you would rarely find me, if ever, on the Discord posting an update saying I'm short here with a stop like this. My stop is going to be much wider if I'm trading this as a range. I'm rarely going to be taking setups with a 0.3% stop or stopping out on a reaction. If I'm having like a static update trade, just trade this wider, right? But you're not going to be reacting to these levels like this, or sorry, these reactions like this, opening, closing a trade, unless you're scalping in size for it. I'm planning on getting back short here if there's a trigger. If there's not, that's fine. It's no big deal. I'm just going to tab over. 7.4 million delta, 15.7. And I am back short. Tis what it is. I'm perfectly fine to, I guess, in this context, to trade this way on this low time frame. There's no high time frame trades to be had here, right? This is our price action. If you want to, if you want to trade something a little bit more like that isn't confined to like this is your setup, we got to wait for that structure to form. I mean, maybe somebody could send me some justification of why this isn't the relevant structure and I shouldn't care what price is doing here and here and here. But this is the only and the most relevant price action in this area of the chart, in my view. So it's what I'm going to be paying attention to and basing my trade off of. The setups could look very different if we form a range here, right? Then we could start looking at different structures. But anyways, I'm going to keep explaining myself in that sense. I'm going to see if we can break down some of this. I am certainly interested in holding this through some of this liquidity. But again, we're going to just have to see if we get any follow through. This has the hallmarks of a nice local high volume, high delta, sweeping into the New York Open. I'd rather take partials on my stops. Just be open, be flexible with the position. But why am I being careful here about like, well, why not just run my stop way up here? Because if price does break out into this liquidity, there's no structure. So, it's one thing if you have like a $500 short. If you have multi six figures, multi-million-dollar positions that you're building, then your stop losses might not trigger, right? Because somebody has to take the other side of the trade. And if price is just going straight up and there's no one selling into this and there's just buying, then your stop is no bueno. And so this is just kind of you got to be a little careful with your stop losses when price is running into structureless breakouts like this on the daily chart. And we don't have much structure above us. But here we have maybe a happy ending to what has been and frankly most scalping sessions probably are this way. Like, you're kind of happy to get out with a little honestly, I'm fine to get out break even for the opportunity to get into some nice trades. But usually a scalping session, it's going to end with, let's say you're scalping and you take 10 trades, 5 to 10 trades. 50-50 win rate, that's perfectly fine. And your winners are a bit bigger than your losers. And that could be your average scalping session. And it's like, whatever. Every once in a while you want a really good scalping session. And sometimes you have a losing scalping session. But you don't have to make every session a home run. I'm perfectly fine with this one not being. But we'll see. The structure's kind of clear here. We have this sweep, liquidity, kind of retest. We'll see. We either break down or we just continue impulsing and grinding up. Perfectly possible. As we do have a little bit of selling getting absorbed here on the first wick here. But the reason that I'm not let's just say like shorting here on this first move and then just sitting short and being like, we're probably just going to do another liquidity grab. I mean, that's kind of what I'm hoping for in a sense, and maybe planning for and ready to execute on. But I'm not going to assume it's going to come and just leave my short position open, because this could easily come. And then do I close it up here, I guess, and a much bigger loss? Typically, I'm looking for these moves to come quickly and then reverse. Maybe we get a couple little wicks through the level. But I'd rather just take the small stop loss and then reopen than get caught assuming that this wick is going to just wick these highs and then come back down and then just be stuck, quote unquote, stuck in a short. You don't get stuck in trades. You invalidate them. And you have a plan before you ever get into them to get out of them. But this is looking kind of nice, frankly. Got this high volume wick. My apologies. For the yawn, hold on. I'm going to explain this short a little bit more in the Discord later. So this isn't necessarily the final target. I want to run all this liquidity on this short, and assess this short after we've reacted to this liquidity, and maybe come back down and retest this kind of region. It's kind of a 4R idea, but it looks kind of nice to me right now as a potential high, and I'll just explain why. Let's have this nice, right at the New York Open, this nice high volume wick through all these highs and rejection. And that's how highs and lows like to form. The high volume wicks at the lows and the highs. It's a mix of positions opening and closing, but we squeezed out a lot of shorts, captured some longs at the top. I want to just point this out really quick. It's not to say maybe he holds the trade and gets out okay, but you have right at the top here, like the top tick of price, 4.4 million longs opening. See it on the big profile here on this candle. increase in open interest in this candle, 7.2 million delta. Anyways, the point is that's a shitty place to fill a $4.4 million buy position. Have a few on the way up. Price reverses. But we got to see how price reacts here, because one thing that is true, and I'm not going to deny this, it's kind of hard to say where the volume is really at with Bitcoin. Maybe everyone's trading the ETF, but some of these pairings, and I know exchanges have added KYC and whatnot. Yes, this is relatively high volume, 62 million, 55 million, but some of these pairings, you were getting multi-hundred million volume candles in some of these moves. And so it is kind of interesting. I mean, there hasn't been that much volume compared to some of our historical volume. Maybe people have just lost interest to some degree. So, all right. I would just say that tentatively this is relevant to hold as resistance. Although some of these just technical kind of fibs can become relevant to even on low time frames. But I would just say that probably looking for, if it becomes more probable that if you start reclaiming these levels, that we're going to take this high again, right? It's just the technical setup is the sweep, the retest, and the breakdown, or just the sweep and the breakdown, similar to the long setup earlier today. The sweep, the reclaim. Once this starts happening, the breakdown becomes much less probable until price is just below the level again. So it shouldn't be a surprise. The most probable scenario is another run through these highs. Just explain that again. I would gotta get, so I don't have to switch between. I need to create a panel so I can actually show order flow on the same screen as the chart, so I don't have to keep switching between them. I am not in this short anymore, and although I'm interested in getting back short, fine to take some partial stops and have a little bit of this long running, I'm going to be very careful here, because this is like dangerous territory for slippage, and there's an argument for trying a long breakout long on it. I just need to be careful here, because this is the point where you just don't want to be short at the wrong time. Structure's not breaking down. We have high volume wick and rejection. Nice idea, but until some of this structure starts breaking down, this holds as resistance. Dangerous to be short here.
And it's not that you can't, like, one of the reasons I love trading around these high volume uh, wicks is because they consistently hold. So it's not that like I typically can't leave my stop above this level. It's just because of this like breakout high time frame idea that I'm just not comfortable trusting the liquidity there. So I'd rather just open and reclose. But like you'll find the consistency with which the high volume, high volume lows and highs hold is pretty good, although not always. Like in this example, it gets barely tapped, but we can see the nice volume here on these low time frames. Nice candles to look for trades around for sure. If you're looking for something like a long, relatively low volume, you can see it down here. Nice little wick. Trading around that can be nice. Price never comes back down and retests the level. But anyways, I'm not gonna hop back into a short here until I see a little bit of weakness. I'm just gonna trade around partial stops. Because I just don't trust the liquidity here. Especially Mexc's liquidity is not the best, especially on alts. But Bitcoin's typically not too bad. But yeah, in the ideal scenario here is I am much more interested in shorts than longs if we can hold some of this weakness. So I definitely am interested in trading this. I'm definitely willing not to get wrecked shorting. But I see it as an opportunity to maybe get into a nice, solid, reasonable short here. But that trigger is not currently valid in my view until we can break back below this. And again, the most likely outcome here is that price does not go straight up 10%, right? It's a low probability event. I mean, even if we ground up, probably a little more likely we wick through these highs and continue doing something like that. It's just, even as a low probability event, I don't like the idea of this major kind of breakout. Like that stop run in this setting. We actually recently had something similar happen on ETH, where it went straight up like 10%. Almost right after, I mean, this was probably a month and a half ago. And I had just said the same thing, that if we break this level, be somewhere, you might expect such a thing to happen. All right, well, I am short again because this is the trigger. Was willing to take a partial stop, and probably will take a partial stop again. But does it make sense? I hope it does. That I'm planning to trade, so I'm sizing, and my validation is such that if I'm risking 1%, let's say if my hard stop gets hit, but in this case, I'm just planning on taking a partial stop. And I'm planning on potentially just reopening the position. And so when I'm typing in my position or market entering, market closing, I'm going into it knowing that I'm probably just going to take a partial and just reopen. And so the important point is here that I'm not taking, give me 1 second. I'm not taking a 1R full stop on these partials, right? So if I'm getting into a trade, getting out of a trade early, and re-entering,
this isn't a 1R stop because my stop is sized to be up here. I'm just accepting the partial, and maybe I end up taking a full 1R or more. Maybe I take 2 or 3 shorts with partials, or 4 shorts even, and it ends up being a 1.5R stop, where in the end I could have just taken a 1R stop and left my stop up here, and I end up worse for wear. But anyways, that's it can go either way, but I'm just explaining that that's what I'm doing. All right, well, I don't love this, how this is playing out at all. Not that I mind the trades I've taken, but I just don't like this these choppy reactions around this level while not running that liquidity. Like I like the short on the quick reaction. I do not like it on this kind of choppy uptrend into this level. Okay. Gonna have to again, very similar to when I decided to just let the short go here. For anyone tuning in to the live stream new, this is scalping the 1 minute chart. It is not not advisable that you trade this way if you're not an advanced trader. But anyways, the concepts apply. So very similar to when I took the initial short here. So you have this short, this long. This short looks good, but I don't like the short here as we just start chopping around here. Similar reason, I just don't like this short anymore. I like it on a quick reaction, a breakdown, a retest, and a move through this liquidity. I do not like it when price is just chopping and grinding up into the level. I can reassess, I can get short. I don't care that I've taken partial stops on the trade. I don't need to make back those partial stops. I don't need to find the short. If I don't like it, I don't like it. I'll just wait for something clear, and that's going in my favor. And so I'd rather just take stops at a break even, partial, near my entry, and just reassess. Might I regret it? Of course. I might close it and price goes in my favor, but I don't know what's going to happen, right? Like I explained here, I could have regretted that this whole time. I just don't like the trade right now. Because all we have price doing here, we have some liquidity ideas, but this isn't happening, right? It's so clear. If I phrase it this way, if I'm looking for this, is the trade setup, which is price running this liquidity on nice volume, nice delta, breaking down, and then running all the liquidity to the downside. And that's the trade thesis here. I'm finding a way to trade around it and risk it, similar to the long thesis here. It looks like that might be happening. There's a kind of a valid kind of idea of looking to take that trade. But is that happening now? I mean, clear, it may happen, but we don't have to guess what's going to happen. We can just ask ourselves, is price doing this? No, it's doing this. Right? So why sit in the short? Same thing with this. Price was doing this, and for the same reason I took a partial win on this short, because price stopped doing this and we had the technical level there. I would take a break even or partial on this scalp. I'm willing to reevaluate, of course, but for now, the trade's not looking so good. I mean, everything. I'm interested to trade. I mean, there's relatively high volume coming in. I'm interested to trade. Let's start looking at the 5-minute chart because we have some structure forming locally here that is certainly viewable. I'm going to be very surprised whether we run these highs or we don't. This liquidity doesn't get run before we chop around more here, or maybe even break out. Who knows? This level is very interesting to me for a long. I am still interested in shorts as well, but just going to let some of this play out. This wick high may just hold, in fact, but for me, better safe than sorry in this circumstance. Someone said, could the account balance be affected if you won't get stopped out correctly because of slippage, even if isolated? Yeah, I mean, it's never bad. Yes, like if you have in your futures account X amount of dollars and a stop doesn't trigger, then it can liquidate your entire account, even if you had a stop loss, right? So it's always a good idea to, even though it's a low risk chance, it's the same reason why I use leverage to represent the funds I would like to trade and don't keep all my money on an exchange. It's a low probability chance, but an exchange can go under, right? Like FTX. And so why keep all my money on there when I can just use leverage to represent some of that trading size, and then I can move money in and out as needed. But for that same reason, it's not smart to keep a large amount of money on an exchange. Although, if you keep it outside of your futures trading account, and it shouldn't be a problem, but I don't like keeping a ton of money on an exchange anyway, right? So that's why I use leverage. But I keep enough on there that I don't want to liquidate an account, because I use cross margin, I should state. I'm using cross margin on my positions, but yeah. Right, well, again, I know this can be kind of frustrating. I'm back short. If you're following along, this might seem like a frustrating way to trade. But it's not the only way I trade. It's just I don't really have much else to go on here, and I am kind of interested in trading some of this volatility. So the reason I'm back short is kind of the same reason I wanted to be short in the first place, which is the idea of sweeping this liquidity with a nice wick into the New York Open and breaking down, grabbing some of this liquidity. So this is kind of the setup. But I took the short, but I closed it early, not because my trade was invalidated. It's just because I'm a little wary of this liquidity up here, and the slippage. And so it's just worth it for me to make a quicker decision to close it earlier, and I'll just reopen it because I only took a partial stop, rather than find out the hard way how well a stop would trigger up here. So the main idea here locally is first to take out these lows and see what the liquidity is like under there, see what the reaction's like. The last valid ad was probably here. The last long in this scalping session was all the way back down here. This is, I think, still a retest idea. I've also, for better or worse, I've just closed this entire long. That kind of offsets some of my stop losses I was taking. So, but anyways, this is the first idea, but there's a lot of potential liquidity here. Looking for like an inverse version of this wick candle volume. But the first place to take profits and consider taking profits on this short is here for me. I mean, if we just run the level, then no. But if we run these levels, get a nice reaction, we'll have to consider closing this short, at least partially, even if I capture 1R and taking out my risk, because yes, it would be nice to short the top here and have price drop 40% this afternoon. But that's not the idea of the trade. It's a local trade setup. So although I can be open to letting the trade carry deeper, same concept. The trade is structured off of this price action. So how can I justify not considering this at TP1, at least potentially? And it's a bit of the middle of the range, so to speak. But I also have to consider a potential counter long setup, and I went over all those things in the earlier in the live stream, so I'm not going to go over it all again on how you could compound the positions both directions. How are you guys feeling? I'm ready to end this live stream, but I do not want to end it in the in this kind of crux sort of moment. So let's just let this liquidity run out. I want to hold this deeper. I'm open to holding this deeper, but I don't care. I'll just take profits off of it if we do not react here. And I can even start pulling some of the risk. Why leave the risk in? We have a reaction. We have the sweep. I mean, I'm manually managing this position anyways, but the idea here is, do I really want to just take a stop loss here? I mean, not really. No. We'll see if the trade works. Oh, all right. Still volume relatively low, assuming price should be heading lower because we haven't tapped really any liquidity here. 2.3 million, 2.7 million, 3 million. Let's start seeing some of those bigger high delta. There's some nice delta, 4.6 million. Why is it coming in? Well, we're taking these first set of lows. Where might I suspect there's more? Under all these lows. So let's see if price starts running these lows and collecting this liquidity. We had, and yeah, you get it. We had 15.7 million delta here, 7.2 million at the top. Looking for an inverse version of that to be the most likely scenario. Price can start ranging at any point, obviously. But yeah, I don't know. I think there's lots to learn here. I don't know. I mean, this kind of stuff isn't, particularly easy in terms of maybe trading execution and all those things. Probably even to follow along. I mean, we're 5 hours in at this point. So this is like this is just kind of a scalping session, I guess. Not the average person is going to be trading this way. Looking more for major levels to put on a trade and go about your life, right? Those are my favorite kind of trades. Sometimes I talk about the how much I love having these high time frame trades planned out. And it's trades like this Sol long and the Matic long and all these trades, which I think this Matic short is still valid. Still, the structure is still valid. Still ideas here. But I'm about to sign off, so I'll let you guys handle, or the Sol short rather. But I'll let you guys, I would suggest paper trading, evaluate that setup on your own time. But the point is, I love having the high time frame ideas planned out, because these ideas, like this Matic trade or the FTM trade, and many of these I share on Twitter, these are high time frame levels where I can just take the trade, I can set it, and then I can just go about the rest of my life. I can go do other things, and I can go for a run in the morning and come back in the afternoon, and I can trade a different time frame, a different session if I want to. I can do a scalping session if I want to, but I don't have to capture the value. Whereas this, I'm here for 5 hours. Yes, it might pay off in a big way, but it's a lot of work, It's a lot of work for sometimes not much more reward, although sometimes it is, than having a well planned out high time frame level. We have a nice high probability setup. They don't come every day, but you put on the trade and then you just sit in that position, and you're making money based on just sitting in the position, not on the hours you spend on the chart, whereas a scalping session is a little different. So anyways, maybe today we'll all pan out and pay off. And I would say probably, I don't know, most of my content is centered around high time frame content or high time frame levels and ideas. But I think I'm pretty good at low time frame as well. I mean, I don't know. It's not like a bragging thing. It's just I feel like I have a pretty good lead. So I mean, here can give price a little bit of wiggle room here, but do we need to consider taking profits off a short here? Yeah, I mean, you don't need to necessarily close it on the exact first wick of the reaction. You're playing with a fraction of an R, your risk reward here between here and here, but you could give price a chance to break down. That's perfectly fine. But just again, being reasonable, you have to consider it and be prepared to take some profits. You can also leave some of it running, right? You can take partial profits. I talked about that idea earlier in the live stream, which maybe this trade turns into this trade. I would love it to. I mean, this is the trade I want, which is running all this liquidity. But I have to be willing to take profits, just like I was willing to take profits on this short. And I was even willing to take this long. I have to be willing to take profits on this short. And maybe I get a chance to add back to it or reopen it if I get stopped out, because I'm going to pull the risk off of this trade. And maybe it's not a 60 or a 9R trade down to here. Maybe it's a 6R trade all in all, right? Maybe I only get half of this position, or maybe not even half, but making reasonable decisions. So okay, why? So let's just talk about this really quickly, because this is where I'm going to end the live stream. What's happening here? Well, we're running all these lows. There's liquidity under here, and I've taken profits from my short. Okay, I'm prepared to take profits. I have it all set up, and I click a button. If I wasn't going to be at the charts, I'd set a limit order. This can be a long scalp as well. Why can it be a long scalp? I'm going to go over this concept. You guys apply these however you think is interesting, or examine them however you think they're interesting, and then we're going to end the live stream. The thesis of the trade is coming down, at least wiping out this liquidity. We have high volume down at the lows here, and we see this volume and this negative delta, 3.7 million, 4.8 million, and we see this reaction, right? So here, you could scalp this long. If I was scalping this long, I would be very cautious with it. And the reason is I just want to see a lot of strength, right? I want to see levels claimed. I want to see impulses, and I want to see continuation, because the delta here, it was not that high, right, compared to these lows. I'm not saying that this can't be the low of the move and we go to 80K from here. Anything's possible. I'm just saying we had 15.7 million, 7.2 million. Yes, this is a nice technical level. Yes, it's a scalpable level. 3.7 million, 4.1 million. But it's not the inverse of this move in terms of volume. It does not mean that price can't go back to the highs. All it means is I would be cautious and aggressive with taking profits. All right. My focus here was trying to explain these concepts. I hope you guys learned something new or something interesting. None of this is an exact science, but everything you can make reasonable decisions based off of reasonable parameters. We're trading the 1 minute chart. This is pretty high octane stuff. Maybe a little bit of a parallel structure forming here. I'm just kidding, of course. Always using risk management, and take your time, paper trade. This is an interesting idea, and maybe this is an interesting idea if this scalp doesn't hold, right? I'm not trying to hit home runs with every single trade, especially ones taken on a low time frame. I'm giving this short, a chance to be a home run, and if it's not reasonable to try to hold this, we're reclaiming this level, I'm just going to take profits. It's a winner. I don't care what happens after that. Making reasonable decisions. So